Welcome, everyone, to our next AFR webinar with Ted Nelson from the Iowa Department of Management, who we thank profusely for giving his time and wisdom yet again for this important topic. We started last week with an overview of the new debt page. It was mainly designed for the more veteran AFR users and filers. This session, though, will be more of an overview for all of the AFR and is primarily focused probably for our newer folks out there, but I know we've got some veteran city officials that will certainly benefit from a refresher with this session. We are recording it, and I will follow up hopefully later today, if possible, with a recording from this session. And so if there's parts of this that you miss or goes too fast or anything like that, the recording will help. And I know Ted will emphasize this throughout the session. He's available for questions. He's always great about that. And we appreciate that. And with that, Ted, I'm going to turn things over to you.
All right. Thank you, Mickey. Like Mickey said, I'm Ted Nellis with the Iowa Department of Management. I handle basically any city financial questions or concerns that you might have, budget, AFR, urban renewal report, you're going to come to me. Like Mickey said, this is intended to be kind of a real basics version of AFR training. We haven't done it in a few years. I've had a posted version, just a video version of a walkthrough of the AFR. That's always on our website at dom.iowa.gov. DOM is in Department of Management at .iowa.gov. And so if you go there and you hover over local government, city resources will be one of the links you'll see. You can always go to that page. There's a budget walkthrough. There's an AFR walkthrough that's always there in replayable video format as well. And then you'll also have this recording to kind of call back on as you go through your process. The AFR is it's a statement basically of all of the prior year's financial activities. So let's just start with a basic idea of what the annual financial report is. So this is backward looking. So we are looking at the last fiscal year that just closed on June 30. So the AFR that you're going to be doing here that I'll release a little later today will be for July 1, 2024 through June 30, 2025. So our fiscal years in Iowa, for any of you who are new, run from July 1 through June 30. And when we refer to a fiscal year, we always refer to it by the last part of the fiscal year. So fiscal year 24-25, that's going to be reported in this AFR, we simply call fiscal year 25. So don't get confused by that. Also, don't get confused by the fact that you're reporting the year that just ended, not the year that we're currently in. No doubt someone will mess that up and report, a quarter year's worth of information. That happens pretty much every year. We have to restart somebody, but we're trying to look at what happened. What were your actuals from the previous year? That's what we're looking to report on here. All of your departmental revenues, expenditures, and balances of the city should be reported on this report. 38420 of the Code of Iowa states that the city has to, in their budget and in their annual financial reporting, keep track of all public funds and any money received or spent or carried by a department of the city, regardless of how autonomously they track their own finances, has to go through the budget and the AFR and should be reported to the city clerk monthly and put into the city's overall accounting software. I bring this up solely because I know in a lot of small cities, there are usually libraries and fire departments that have their own checkbooks and like to think of themselves as autonomous from the city. They are not. They need to be included in the city budget. All of their activities have to also be included in the AFR every year, and they should be reporting monthly to the city clerk and city council their activities so that they can be tracked as part of your tracking for when the budget needs to be amended, because they are part of the budget. They can't just spend money on their own. So keep that in mind. They have to be part of this AFR, all of their revenues, expenditures, and held balances. So if there is a scenario in your city where there is a department that has its own checking, make sure that monthly the city clerk or the city finance officer or the council is getting a statement, a budget statement, or a checking or saving statement, just so that they can see for tracking purposes and for reporting purposes when it comes to the AFR, how much cash they've spent, brought in, and have on hand. Like I said, this is backward looking. So we're looking July 1 of 24 in this case through June 30 of 25. So we're looking at the last year that just closed. What are the balances? beginning of year, end of year. So that the beginning balance is all of the cash that the city had in all of its accounts. So that includes those accounts where they're kind of kept by the department. So we want to know all of the cash in those accounts, checking, savings, money markets, and then all of your investments as well. So CDs especially are often left off of the AFR beginning balances. So make sure when you're gathering beginning balances that you're including CDs and investments as part of that beginning balance, because that is cash that could be made liquid by the city should it need to be. So all of that has to be reported as part of the beginning balance of the city. Revenues received throughout the fiscal year, no matter what kind of revenue it was, needs to be recorded and on the AFR. Expenditures made to any outside sources and any transfers made between funds also need to be recorded. And then you also have to report your debt balances, um, the outstanding amount that you had and the amount paid during the year. This year is the first year that we have the House File 718 requirement to have an increased amount of debt reporting. So there's going to be an entirely new page for those of you guys who have maybe done one or two AFRs. There is a new page this year that we'll go over in some detail a little bit later, the city debt detail page, which will require you to put in more granular debt information than we've had on the AFR in years past. So make sure you pay attention to that. But those are the items that we are going to need for the annual financial report. So these are the items that you should be at this point of the year collecting for the last year to have ready to enter into this report. This report's due December 1st each year. But the report itself, that should be plenty of time to get it. It's a wide-ranging report, but it's a report of things that have already happened. So it shouldn't take you all that long to put it together, as long as you're tracking throughout the year is good. That's why it's super important that every single month you are reconciling, and every single month you are reporting your estimate or your actual figures to your council. And that way, if you do that every month throughout the year, the end of the year, it should just be a case of gathering those all together and adding them up and putting them into the AFR system. Even if you don't have fancy accounting software, that will give you a nice basis to work from to have your AFR ready in pretty short order. If you're late with your AFR, it can have financial consequences. So like I said, it's due December 1st. If you submit after December 1, it can inhibit your budget process if you're too late. So if you're late enough that you've gone into budget season and you can't hold your budget hearings until that AFR has been submitted. So if you do your budget hearings before the AFR is submitted, I reject your hearings and you have to go back and redo them, and that will then eventually make you late. If you submit a budget late, that will cut your property tax dollars for the next fiscal year. So there is a financial penalty that can apply. Now, December 1 is really, this year it'll be 5 months to get it in. Usually it's 6 months, because usually I have it released in July. But this year, with adding the new page, we had to release it a little bit later. But you usually have plenty of time to get this done if you get on it early. And then we also strongly encourage councils to be reviewing this. So they should be presented with this. It's not technically required that your council approve this. The only thing that is required is that it's published or posted. If you're 201 and above in population, you have to publish it just once. There's no 10 and 20, or well, now it's a 4 and 20 requirement. There's no 4 and 20 requirement that this get published, a certain amount of time before any meeting. You just have to publish it before December 1 so that you can get it submitted. But we also want you to take it to council and have them review it and take a look at it in open meeting. That is not, strictly speaking, legally required, but it's a great idea, because your council should be aware of the financial position of your city at the end of the fiscal year. So make sure that you are also taking it to your council for review. If you can't do that until after December 1, that's fine. Publish it first and get it turned in and get it submitted by December 1. With that new debt page comes a new requirement for us at Department of Management. We have to report to the General Assembly now every year by January 1, a reporting of all of the debt outstanding for cities and counties for all of the cities and counties in Iowa. That's due January 1. So we have to spend all of December getting that together. So the later that you guys submit the AFR, the harder it makes to do that report. So as a personal plea, I ask that you respect that December 1 deadline and make sure that you abide by that and get it in on time. All right. We're going to walk through the AFR system here in a second. Just a little navigation stuff. This is going to be a review for a lot of you who have done a budget or an AFR inside the online system. The AFR is a completely online report. There is no spreadsheet entry anymore. We do still give you a draft spreadsheet if you would like to do it that way. If you're an older hand who remembers the old spreadsheet system, I still create that spreadsheet every year and put it out on our website. It's always out there if you want to grab it and use that to add up all of your revenues and expenditures, and then you can hand enter it into the system after that. There is no upload into the AFR system as of yet. The budget system has an upload where you can take data straight from certain accounting software packages, not all of them, but certain accounting software packages will have an output that you can then grab with our system and upload it. The AFR doesn't have that yet. I'm going to try to hopefully make that in the coming years, but it comes down to money, just like everything else. I have a budget I have to keep to as well. So we'll look at that for the future, but right now that doesn't exist. Only exists for the budget. So any of you who are new, just know that, because some of the software companies are even confused on what they're putting out. I got a question the other day about an AFR upload that some company thought they had. We do not. We don't have an AFR upload into our system. So before we go forward for a second, I see a question in the chat. Might be a silly question. I'm assuming that if they have a city account, but also an association account, the monies are held different and we wouldn't need to do that for the associations. Yes. Okay. So this is a question about what I had spoken about before. Library and fire departments oftentimes have a 501c3 association that does their fundraising. So it'll be like Friends of the Library or Friends of the Fire Department. Those are not city monies until they're donated to the city, right? So if they've got a separate checking account for their 501c3, that's not city money that has to be reported. Only the money that's held in the fire department's checking account that is controlled by the city, that's the money that has to be reported on the AFR. Great question. All right, so let's dive into a quick review of the AFR system. So here is the web address for not only the AFR but the budget as well, is dom-localgov.iowa.gov. So every year you'll have to go here and you'll have to log in. You can see down below there's a little blue login link that'll be in the top left of the page that you come to when you go to dom-localgov.iowa.gov. Once you click on login, it'll prompt you to log in with your what we call an ANA account. So it's your user ID that ends in @Iowa ID. That's your ANA account. You'll use it for a lot of different systems across the state of Iowa. You'll use it for IPERS. You'll use it for the Street Finance Report. So you're going to need an ANA account if you don't have one yet. If you're a new city clerk or you're a new finance person and you do not have an ANA account as of yet, make sure that you get one. Our system has a self-guided request that you can make, or self-guided credentialing system, I guess you'd call it. So if you go to the dom-localgov.iowa.gov and you click on login, up at the top of the screen when you get to the login page, where you put in your user ID and password to sign in, there's a create an account link. So if you don't currently have your own ANA @Iowa ID username and password, you can go to create an account to set one up. And like I said, it's self-guided. So once you click create an account, it'll ask you for your first and last name, and then you can click on the green register button. Once you do that, it will assign you a username based on your first and last name if it's available. You can change that username to be whatever you want it to be. So if you want to make it more generic, like, Des Moines.cityclerk @Iowa ID, you can absolutely do that. That's fine. Because if you're going to make this a legacy username and password that other clerks after you are also going to use, that's fine. You can make it more generic. It will default usually to your first and last name, but that's completely editable. You can change that. It will also then ask you for an email address that you can tie the account to. So this is where it gets tricky if you are a new clerk inside of a city that has a generic email address for the city clerk. That's just cityclerk at, the yourcityiowa.gov or .com or .org. So if you have one of those generic emails that a previous clerk also used, they may have already set up an account using that email. That's a problem because our system for cybersecurity only allows one account per email address. So if your generic city clerk email has already been burned. It's already been used for an address for one of the sign-ins that you no longer have or don't want to use. You're going to have to use a different email address here for registration. The great news is this email address will only ever be used for password maintenance. That's it. I don't see it. I don't ever use it for correspondence. I'll still send things to your city clerk at your city email address. So you can put in a personal email address here and make your own personal account with your first and last name that you can then carry with you should you move to a new position that is also a public position that logs into an ANA system. So you can, if you need to, use your personal email address and it won't go anywhere else. It'll just stay with our IT folks and it'll just be used for password maintenance and account maintenance. That's it. I'll never see it. I'll never use it for correspondence unless you tell me to. So feel free to set this up under a personal email account if you want. Once you have those entered and you click the saved account details green button at the bottom, it will send you an email to verify your email address, to verify that it's an actual email address. So you can then get that email and you'll have to check your spam folder because it will come from a do not reply email address. So sometimes those go into your spam folder. You should have it within 2 minutes of clicking the link. So you go in there, it has a link in it that it wants you to click to verify your email address. You can do that and feel totally safe. It is not a bot and it's not a scam. That's from us. Just make sure it comes from a do not reply at iowa.gov email address. Once you click the link to verify your email account, it will then take you to this screen where it wants you to put in your baseline questions. So these are your security baseline questions that you use in case you get locked out or in case you want to reset your password. So it'll ask you for 3 questions, 2 of them that you'll select from a drop-down list, 1 that you will create on your own and provide answers to. So make sure that you keep the answers to these questions so that should you need to reset your password or you get locked out, that we have a way for you to get back in. Okay. Once you've entered the 3 questions and the 3 answers, you click on Save Identity Baseline at the bottom, that green button, and then it will allow you to create a password. Okay. Once you create your password and save it, then you're done and you can email me your username. I don't want your password. Never share your password with anyone. Every year I will have someone email me their username and password. Don't do it. I don't want it. They don't allow me to play with passwords, but I need your username. So you're at Iowa ID username to get you connected to your account. Because if you set up an account in our system, nowhere along that process of setting up your account does it ask you what city you want to be attached to. You have to email your username to me and the city you want to be attached to, and then I will get you set up inside the system. Right there on the slide is my email address, ted.nellison@dom.iowa.gov. And there's my phone number, my direct line to my desk. So you can either email it to me or call me. Usually email is easier because that way I can actually see it spelled out and I can just do a copy paste into the system. So if you can email it to me, that'd be great. If you have a current ANA account, but you're new to a city and you just need to be connected, then just send me your current ANA account ID in the city you want to be reconnected to and the city you're coming from that you need to be removed from, or the other local government. It's not always a city. It could be a school or a county, but the other local government that you want to be disconnected from. And I can do both of those in one fell swoop. I can disconnect you from your old one and connect you to your new one. So anybody who's coming over from a different location, I can also help you with that. Okay, quick question in the Q&A was, will this PowerPoint be sent to us via email? Answer is yes. I will provide it to Mickey and then Mickey will provide it out, I believe. Well, now he has to do it. I've obligated Mickey to do it. So sorry, Mickey. But yes, we will provide the PowerPoint to you. And like I said, there's always a video on my website as well. So just make sure that you go there as well. Okay, so now that you've got a password set up, let's talk about how you log into the system. Once again, you go to dom-localgov.iowa.gov. There's a login link, top left corner. You click on that login link. Once you've established your account and you've been linked to your city, you can do this. It'll take you to our login page. And once you get to the login page, it's just a spot that says username, password. That's it. You put those in and you enter it. It will bring you into our system. You'll see this this screenshot here in the top left corner, it'll have a navigation pane, and you'll have an option that says local budgets. Okay. If you log in and I haven't connected you to a city, you won't see this. What you'll see is a message at the top that says you've logged into the system, but you don't have any rights inside the system. So I can't show you anything. That's your cue to contact me and get assigned to a city. Okay. But once I've assigned you, you'll see this. You'll see when you come in, it's kind of daunting right away, um, because you see a mostly blank page. You're like, oh no, I did something wrong. You didn't. If you see a mostly blank page, you're in the right spot. You just have to look on the left-hand side. There will be a local budgets option in gray here. And then underneath it, there will be three options: budgets, amendments, and annual financial reports. You want to click on, for the AFR, that stands for annual financial report. So you want to click on annual financial reports, AFRs. Now, that's under local budgets. Don't get confused, because there's also, you can see at the bottom of that screenshot, there's also a reports section, and one of the reports section items is annual financial report search. That one is the public one, and it will only take you to previous annual financial reports that have been filed. So don't get confused. If you are looking to enter your information, click on annual financial reports, parentheses, AFRs, under the local budgets submenu. Okay. Once you do that, you will see all of the AFRs for your city that have been previously filed, and the one that is now available will be marked new. So when you mark it new, it will be, or when it's new, it'll be at the top. So it'll be the very first one. So when you come into the system now, after I release it later today, you'll see 2025 right at the top, and that'll be the newest one, and it should say new. All of the rest of them should say published. If you have one that does not say published, please let me know, so that I can get that corrected in the system. But you want to select the topmost one, because it always sorts initially when you log in, it always sorts by fiscal year descending. So 2025 should be on top. You click the edit button right next to the 2025 line in this case. This is last year, so it still shows 2024. And Wendy, I see your question. Yep, your 2025 will still say unavailable because I have not released it yet. That will change later today and show new. So that is correct. So be prepared. Don't sign in just yet because I haven't released it yet. Because I haven't gotten my review done yet this morning, but I should be releasing that hopefully midday if IT did what they told me they were going to do and have it ready in the production side. But once it's released, you'll see this new and you can click edit. Right now, if you go in there, it'll stay unavailable and you won't have an edit button. Okay, so until that blue edit button shows up, you aren't able to do anything in it. Once you click edit, it will take you into the report itself and drop you on the All Funds P1 page, but it will also do something else. It will change it from new as the status to in progress. So new means it's never been touched. Nothing's ever been saved. Nobody's ever gone into it and done any work. In progress means that work has been done and saved, but it has not been published yet. When you publish it in the system, so you create your notice to send to the newspaper or to post in your 3 locations, then you will see published as the status. Once you see published as the status, that means you have submitted it in the electronic system. You have to follow up with documents uploaded into our system, but that means that electronically it has been submitted. We'll go over that at the end of we'll go over submission at the end of the presentation. So don't worry about that now, but just recognize that the status will tell you kind of where you're at in the process. Okay, so you'll want to click on edit. Like I said, it'll dump you right into our system. You'll end up on the All Funds P1 page is what we call it. All Funds P1 is the summary page. That is the page that you post or publish at the end of this. It sums from all of the other pages in the AFR. The AFR has several pages that you'll have to reckon with before you're finished, that you may have to enter information in. You will not fill out every page completely. You will not fill out all of the pages necessarily, depending on the size of your city. So just bear that in mind now. Okay. On the left-hand side, there's always a navigation pane that's there. So it's that navigation pane will allow you to go back to our dashboard and out of the AFR. It'll allow you to go to the budget system if you want, or it'll allow you to go to the amendment system. You can get rid of it by clicking on those double gray chevrons at the top left. And I would suggest if you have a smaller computer screen, not a wide 25 or 21-inch screen, if you have just your laptop screen, you're going to want to click those double silver chevrons in the top left and get that navigation menu minimized, because that will bring up a lot more of the AFR onto your screen. Your revenue and expense pages of your AFR are quite wide. They're several columns wide, and without dropping that navigation menu, without minimizing it, you won't be able to see all of the AFR columns on one screen. Okay, so just make sure that you do that. It'll eliminate a lot of scrolling left and right and a lot of scrolling up and down that you have to do if you minimize that screen. You can always bring it back. You can always bring back that navigation pane by clicking on the double silver chevrons again, because they'll be, if they're pointing out, you'll see the pane. If they're pointing in, you won't see the pane. But if you click on them when they're pointing in again, they will point out and it'll bring back that navigation pane where you can log out and where you can navigate to other reports. Okay. Up at the top, we have a bar of buttons that give you your options for how to manage your AFR. Okay. Instructions is on the top left. That is an important button because it will give you a PDF copy of the written instructions for the AFR, which I've just gone through and made some changes to, and I've added a new section on the debt page. So don't miss that. But it will give you a PDF copy of the instructions that you can then download and print, or you can just download and use electronically. So those are always there through the instructions button. And when you click it, it should automatically bring those up for you in a separate tab of your browser. Okay. The document upload button, we will go over towards the end of this, presentation, towards the end of the webinar, but it is for uploading your signed documents. You still have to have, we still need a signed copy of the AFR, and if you publish a proof of publication showing that you published in a newspaper as you're supposed to under law. So we need those two items from you still. Now, the nice part is they can now be scanned in and uploaded using that document upload button, and we'll go over that process a little later. The publish posting button, which in this, you see it's grayed out here, will not turn blue until you have entered information and saved, and then you can't click it until you've completed all of the necessary pages of the AFR. But that will be the thing that creates a posting copy or a publishing copy that you can send to your newspaper or post in your 3 locations. The copy that it creates does not have a signature block at the bottom, and that's okay. We remove the signature block because when you're publishing, that doesn't have to be published. That only has to be signed before it's submitted to us. Okay. The check errors button will help you find things that are missing. So you can click the orange check errors button at any time, as many times as you want, and it will show you items that are missing, because there's a minimum amount of items that you have to enter to be able to submit the AFR. Okay, and that's what it's checking for. It's not checking whether you've got the right numbers in. It's checking whether you've got a legal minimum of information in to submit the AFR. Okay, so it's not going to be able to tell you, is this right? Is it wrong? Only you can do that by looking at your numbers compared to your accounting software. All right, but it will tell you if you're missing information in some place that there should be information, or if you have unbalanced transfer numbers, or if you have an ending balance that's below 0. It checks for those kinds of things. Okay, but check errors has to be cleared before you are able to do the publish posting button. You have to have a clean bill of health where it says no errors found. The save button you want to be clicking several times throughout the process. Okay, this system will time you out, and we'll go over that in a minute. But the system does have a timeout that happens, so you want to make sure that you save along the way. My rule of thumb is anytime I move from one page to another page, I generally save, because there's no limit on the amount of times you can save, and saving only takes about 10 seconds. So if you click save, it'll run a quick basic copy paste into our SQL database so that all of your information is saved and will come up next time you log in. Do that every time you change pages. If you've entered information on a page and you flip to a new page, I would suggest saving before or right after you flip to that new page so that we have a good track record. Because if you work and work and work and enter a bunch of information but never save it, and then you get timed out, all of that information disappears. So make sure that you're saving as you go. There is no auto save function. Print in the top right corner has a drop down, which will allow you to print either the current page you're on, all of the AFR pages, or just your posting notice if you've already generated or if you've already done published posting. So it will allow you to print any of those separate ways. Usually you're going to be printing your full AFR, or you're going to be printing your publication page. But if you want to just print out one page, like you just want to print out your all funds P1 page to be signed, that's great. You can do that. There's a print current tab, which will allow you to do that. That's that little drop down arrow on the right-hand side of the print button. Okay. So make sure that you're selecting the right item for how you want to print. Up along the top below the buttons are all of the different pages that you can navigate to in the AFR. So they're in blue if you can navigate to them. It's in black if it's the page you are on. So you can see in this screenshot example, we are on the All Funds P1 page. So that one has a little tab around it and it's black. So that means that tells me I'm on the All Funds P1 page. The blue ones are places where I can jump to. So everything from revenues page 2 all the way through now it'll be notes and remarks right after city debt detail. You can go to all of those different pages by clicking on their blue header. Okay, and that's along the top. It's a lot like tabs of a spreadsheet. So you just click on the tab you want to go to, and it'll take you there. There's certain pages that you have to finish before you can submit the AFR. So you're going to have to go through each of these pages one by one and enter information as necessary. Okay, cells with a blue background, you can see at the bottom of the screenshot there on the bottom of the page. The cells with the blue background are places where you can enter information. Now, it is not necessary that you're going to enter information in all of these pages, right? Because your city size and your complexity of your city will tell you how many cells you're going to enter into. Some of you are of a small enough city where you may only use the general fund and the special fund, and that's it. So you'd be entering only under those two columns, general and special revenue. Okay, but if you have a utility, you'll also be entering under proprietary. If you do TIF or you pay debt service, you'll be entering under those two columns. So make sure you're paying attention to where you're at. A lot of cities will only fill about a quarter of the cells available. I would say most cities will only fill between a quarter and a third of the cells available. There's only the very largest cities in the state will fill more than 2/3 of the cells available. So if you finish your report, everything balances to what you have in your internal accounting software, but there's still a bunch of blank space. Don't be thrown by that. That's normal. Okay. For a lot of small cities, medium cities, that's very normal. Like I said, only the biggest ones use more than 2/3 of the available cells. Okay. You can move from cell to cell by clicking on the cell with your mouse or by clicking your tab button. If you click your tab button, it will move you right and then it will move you down. So make sure that you are using your tab button to move or by clicking with your mouse. If you hit enter, it won't move you to the next cell. So just be aware of that. You're going to have to use your tab button to move to the next cell. You can't use your arrow keys. Those won't work in here to move you up, down, and around. Only the tab button moves you, and it moves you right and then down. So make sure, and it'll only move you to the blue cells. Okay, so make sure that you're aware of that. There are certain blue cells in the headers of a row sometimes because we give you available extra lines if you want to add a little bit more detail to a revenue that the city doesn't generally get year to year or doesn't fit neatly into one of the predetermined rows. You can put that in one of the rows that we have space for you to enter your own header, and you can put a little bit more explanation there. So just bear that in mind as well. Like I said before, you will be timed out. Okay, so there's a timeout function that kicks in every 55 minutes. You get timed out after an hour. Okay, every 55 minutes, you will see this orange banner appear across the top of the page that says your session's about to expire, and then it will have a countdown clock. That countdown clock starts at 5 minutes and counts down to 0. You have to click on the word renew in that orange bar to extend the session each time that pops up. So once an hour, you have to renew. So if you're working on this for more than 1 hour, you're going to see this at least once. You can stay in the system forever if you want to, as long as once an hour at the 55-minute mark, you click renew. Okay, so make sure that you are paying attention to that, because if you do not click renew before that countdown clock gets to 0, anything you have not yet saved is lost and you're booted out of the system. So again, I'm going to say it again, save, save, save. Make sure you're saving while you're in the system. We have something like 5,000 users in the state that could be in these systems at any one time. So we can't put in an auto save functionality because of the sheer number of users and our limited amount of resource to support all of those users. It would explode, right? So if we tried to auto save all the time, that system would turn into basically running in molasses. It would be so slow and it would probably fry our server room. So the The compromise we have is that you hit the renew button. You can still stay in it, but you have to refresh your session every time, and then we can get rid of people who have walked away. So if you're going to leave your computer, if you're in a single person office where you have to do counter service and and or you have to answer phone calls as well, make sure before you phone is ringing and you need to get out of your AFR to answer a phone call, even if you think it's only going to be a few minutes, click save. If you get up to use the restroom, click save. If you get up to go to the front desk to help somebody who's walked in, click save, because you never know how long you're going to be away from your desk. What seems like it's going to be a 2-minute conversation can turn into a half hour pretty quickly. We've all experienced that. So make sure that you save. Otherwise, anything that is not saved will go um, will go away once you're timed out. And Teresa brings up a good point in the chat. You can't just click on the yellow banner. You have to click on the word renew. Okay, so if you click on that yellow orange banner, it won't do anything. You have not renewed at that point. You have to click on the word renew. Okay, so make sure that you can do it. Also, we have the ability to assign multiple users for your city. So if you have a city clerk, a city finance officer, an accounting clerk, a utility billing clerk, and they all do different parts of the AFR, I can assign every single one of them to your city, to the budget and the AFR in our system. But you can't work on the AFR or the budget at the same time, because if you do, you'll constantly be overwriting each other. And so the work that one person does will be gone, and the work that the other person does that's saved, that will stay. So make sure that if you are working multiple users who are entering things at different times, make sure that you guys are working together locally to schedule that out so that you're not constantly overwriting each other. Okay. All right, up at the very top of each page, there's a header that gives you information about which page you're on, which city you are entering for, and then what type of AFR you are submitting. So the annual financial report allows 2 different types of entry. Okay, you can enter it in GAAP format, or generally accepted accounting principles, or modified accrual format, which means you're not quite GAAP, but you're not quite cash. So there's 2 types of accounting. There's accrual accounting, which counts revenues and expenditures when they're earned. And then there's cash basis accounting, which most of you will use in the state of Iowa. Cash basis accounting, you count the revenue when it's received. So when you cash the check, that's when you recognize the revenue. And then you count the expenditures when the check is written out of your system. So when money comes in, you count it. When money goes out, you count it. Accrual accounting, it's even if I write the check in July and it might have been earned in June, I log it as a June expenditure because that's when it was actually earned. So you got to know which type of accounting you are. 90% of the cities in the state are cash basis, as you should be. Their only reason to be accrual is if you want to get GFOA certification as a high quality budgeting city or high quality accounting city. If you're not interested in any of that, which most small cities don't need to be interested in that, just use cash basis. It's much easier because it's money in, money out. You account for it when it comes and you account for it when it leaves. You don't have to account for it when it's earned and when it's not earned. If you use depreciation for some reason as a city, you might want to use GAAP accounting. But again, depreciation is usually for tax advantage. Cities don't pay taxes. I don't understand the appeal of GAAP, but I'm also not an accountant. So that might be it. But most of you will be cash basis. If you switch that, so if you go from GAAP to cash basis or cash basis back to GAAP, you can change this radio button at the top at any time, and it will hold the previous year's entry. So if in 2024 I was a cash basis city, but then I went to GAAP for 25, I click the GAAP in 25 and save it. 26 will automatically come up as GAAP selected. So just make sure that you know which you are. Most of you will be cash basis, and it's already pre-selected for you based on what was entered by the city last year. Here we go. So the AFR is set up to go along with our uniform chart of accounts. So there is a city uniform chart of accounts at dom.iowa.gov under the city resources page. There's a link to it right there. So the chart of accounts is a number system, kind of like the Dewey Decimal System for libraries, that just helps you organize your revenues by which fund it came in or came into or went out of, and what it was spent for or received for. It's just a way to organize why you have this money or why you spent this money, essentially. Okay. We have that all in a PDF document at our website. So if you're not currently using our chart of accounts, I would strongly suggest that you think about it. It is a great system for organizing your revenues and expenditures. The other nice part about it is if you use our uniform chart of accounts, the AFR is set up to go with that chart of accounts. So it will basically, your accounting them will basically be right in the proper order to go into the AFR, because we have our columns set up based on the fund numbers in the uniform chart of accounts. We have our rows set up on the programs, the expenditure programs, or the revenue codes, the revenue item codes, um, so that you can just follow those along and know by number where to put items. Okay, because there's the uniform chart of accounts has a basically a three a three group system for accounting. The first three digits will be your fund number. The second three or four digits will be your departmental code. So which department was the money brought in for or spent out of. And then your last four digits will be either the expense item code to say, what did we spend this on? Or the revenue item code to say, what type of revenue was this? Why did we receive it? What was it? Who was it received from, and what was it received for? Okay, so you can see at the bottom the example, we have 001-110-6010. And that tells me, A, went into the general fund. Anything starting with a zero, general fund. The second set of three digits, 110, tells me it was public safety, and not just that, it was police protection. So you can see police protection is 110, so it tells me this was money that was spent out of the general fund for police protection. And then the last part, 6010, tells me that this was full-time wages. So I probably paid police officer wages with this money, full-time wages, the 6010. So it's really quick and easy. So that'll tell me, okay, I need to put this under the general column of the AFR on the police protection line of expenditures, page 6, and I know it is for wages. So that I need to include this amount on other P10 under the wages paid by the city during the fiscal year. So it's a nice, easy way to organize. Most accounting software used in this state uses our uniform chart of accounts as its basis, or some variant of it. I know that like um, there's certain software where it's not quite the same, but it's pretty close. They at least have their own internal logic that will fit with our reporting. If you are keeping track on paper or in a spreadsheet, you might want to think about using the numbering system in the uniform chart of accounts. All right. Like I said, all of our funds create the columns on the pages. So the columns going left to right on the page are based on the funds of the city. In this screenshot, I put all of the fund numbers that go into each column at the top. Now, you don't have to worry about like saving this and referring to this, because I also have, this will be a part of the instruction document that you can download. I also have a PDF. Hopefully you guys can see that. I have a PDF overlay of all of the pages, all of the entry pages in the AFR, showing the fund numbers that go into each column. And then along the side, it'll either be the revenue code if we're in the revenue pages, or the program numbers of the programs, the expenditure programs that go onto that line. So that you can always refer back to this if you use our chart of accounts to see which column should I be in and which line should I be on for entering revenues. Okay. But that's how this AFR is set up. It's set up to go by your funds in the columns across and your revenues and expenditures by authority code or by program down the side of the page. Okay. The most important thing to remember on the AFR is to be in the right fund, to be entering information into the right fund. Where I see people get confused or enter incorrect things, it's either one of two things. Number one, they forgot to enter a beginning balance on line 134 of revenues, page 5. I memorized that pretty easily because that's the question I get most often. People get to the end of their AFR and they're like, it doesn't tie out. Well, probably because you didn't enter your beginning balance. The other thing that gets screwed up by people who are newer to the AFR is you're not putting your revenues and expenditures into the proper fund and into the proper columns. So make sure that you are tracking the columns and that you are putting the figures into the right column based on the fund that it's accounted for in your internal software. Now, there's a lot of columns on the page. You can see general through proprietary or general through grand total is a lot of columns. It may not fit left to right on your screen. So make sure that you are shifting right to left using the scroll bar on the bottom and that you are addressing each one of these columns as needed on the page. Like I said, some of you will be small enough that you'll only use a couple of the columns, usually general and special revenue. But a lot of cities, I'd say 3/4 of the cities in Iowa or better, have a utility. And all of your utility activity, water, sewer, gas, electric, possibly garbage, needs to go into your proprietary column, right? If you own the utility and you are the one in charge of maintaining the utility, that makes it proprietary. So make sure you get it into the right spot. Okay. So just make sure that you're tracking that, and that's where the chart of accounts can come in handy to tell you which column it goes into by fund number. Oops. There we go. So here's the fund columns and their attendant numbers. This is also in the uniform chart of accounts, so I'm not going to belabor it too much. But it basically goes every 100 numbers we change to a new fund. Okay, the one thing I will point out is your special revenues go from 100 to 199, but lines 125 through 144 are special revenue that belongs to TIF. Okay, so that would go into the TIF special revenue column. So make sure that you are addressing that as you go. The other item that I'd point out is 600 and up all goes into proprietary. So make sure that you are getting that into proprietary appropriately. So if you're a city that uses internal service funds, which are funds that it's basically one fund paying another fund an expense that's owed. So if you have like an insurance expense where each of the departments of the city pay a certain amount, that might be an internal service fund. Those are 800 level. They get lumped under proprietary. So don't get messed up by that. But for all of you people who are newer, just know each fund, there are certain items that should be going under each column, and the columns are tied to the funds of your city accounting software. Okay. I'm going to take a second before we get into the revenues pages, and we'll go over. There's a question out there. Where is the overlay with the code in the Yeah, I'm in this year's instruction documents. It will be in the back of the instruction documents as a couple of those pages. So when if you're looking for that PDF I showed where it's got all of the chart of accounts numbers overlaid onto the AFR pages, make sure that you look at the back of the instructions that you can get out of the AFR system by clicking on the instructions button. Okay. I just got to notice my headset's going to die, so give me 1 second and I'm going to adjust to a different source. All right. Hopefully you guys can still hear me. Mickey, give me a thumbs up if you can still hear me through my separate mic. Not
Yeah,
quite as good.
You're good, Ted.
Okay, perfect. All right. So that's a good lesson for you. Make sure that you check your equipment before you go into a public presentation. It's always good. So we got another question that came in. Can you edit the AFR after publishing it? Let's say months later you found that you put in a wrong amount. Yes, great question. And yes, you can amend your AFR at any time. The difference is, the thing you got to remember is if you want to amend it, you have to talk to me because I have to reopen it for you. An amendment may cause you to need to republish your AFR summary, or it may not. It depends on how material the changes are. So you have to let me know what's being changed. I'll open it for you. You can make the changes. We'll resave it. And then I will let you know whether or not you have to republish. Most of the time, it doesn't require republication because usually when a change is coming, it's because you had some numbers flipped around into the wrong column or something like that. And that's fine. We can amend that at any time. You can amend your AFR basically all the way through June 30. So make sure you have everything kind of cleaned up before the end of the next fiscal year, and we can get that amendment done. Okay, revenues pages are first. So you can see on the tabs at the top of the screen, we start on All Fund P1, which is a summary page that all of the numbers from other pages flow into. And that's the page that gets printed in the newspaper or posted in your 3 locations. The next 4 pages, revenues page 2, page 3, page 4, and page 5,
are all revenue pages of the city. Each page has a different number of lines or a different set of data that has to go into it for revenue. So make sure you're addressing all of these pages, revenues P2 through revenues P5, because you will have to probably enter something on all of them. All right. Revenues page 2 is mainly property taxes is the thing, and other city taxes. Those are the two items, the two big items that go on this page. The taxes at the top, you have line 1 through line 6, we'll say, are property tax connected. Lines 1 through 4 are property taxes. So the first one is taxes levied on property. That's line 1. That is where you put in the amount of dollars you received from your county for property tax payments during the last fiscal year. And remember, we're reporting the previous fiscal year. So this year's report, I want you to report what you received between July 1, 2024 and June 30, 2025 in property tax payments from your county treasurer. Okay, that goes on line 1. Delinquent property tax. So just to give you a breakout of the property tax payment schedule, you will receive the current fiscal year, so fiscal year 25-26. I won't start receiving property taxes that are owed for 25-26 until the end of September. So September all the way through next June, any payments I receive of property taxes during that time, I would count as taxes levied on property. If I receive property tax payments in July and August, so if I received it last month or this month, I would count that as a delinquent property tax, because that's actually tax money that was owed in the prior fiscal year, and you can put it on line 2. If you don't separate these out, I don't particularly care. You can just put all of your taxes levied on property on line 1, and I'm perfectly happy. But if you track them separately and you want to show them separately, that's your breakdown. Okay. Line 3 sums those two. So it takes the taxes levied on property for the fiscal year being reported and the delinquent taxes from a prior year, and it adds them together into your total property taxes. Normally, line 1 and line 3 will match because you don't enter, most cities don't enter delinquent property tax, and that's A-okay. If you just mush it all together and call it property tax, that's fine. The key thing that you want to remember, though, is you have to track your property tax by the fund that it goes into. Most of your property taxes go into general fund. So your consolidated general fund levy, all the way down through your ag land levy on our budget, those go into your general fund. But your employee benefits goes into special revenue. If you are a city that has a self-supporting municipal improvement district or a SMID, that also goes into the special revenue column. Your capital projects, or your capital improvement reserves levy or your capital projects levy, that goes into your capital projects fund. So it should be in that column. And then if you issue a debt service levy on your GO debts, that goes in, the property taxes from your debt service levy go into the debt service column. So make sure you're putting your revenues in the appropriate column for property taxes and all other revenues. But property taxes especially sometimes all get jumbled up and thrown into the first column, the general column. Don't do that. Make sure you keep them organized into the column in which they belong. Okay. Let's see. Also down on page 1 will be your TIF revenues. Sorry, your TIF revenues, which is it's still a property tax, but it's a different type of property tax. It's a diverted property tax. So it gets its own line. That has to be separated out because the only place you can enter TIF property tax revenue is under the TIF fund column on line 5. So make sure that you are putting that in the appropriate column under TIF special revenues on the TIF revenue line. And that will be broken out on your tax statements that you get from the county each month. There will be TIF separated from everything else. So all you've got to do is total all of those up, put it on line 5, and you're good to go. Other city taxes is right below your property taxes. And this is anything that is not strictly speaking a property tax. Some of it may be connected to property taxes, like your mobile home taxes. Those aren't technically a property tax. They're kind of like a rental excise tax. Your utility replacement excise tax, we treat as property tax, but it's technically a separate revenue that's not gained from taxation on property. It's gained on gas and electric companies' transmission of energy. That's what's being taxed there. So there's a line for utility replacement excise taxes. You get paid utility replacement excise tax with your property taxes, but it's called either gas and electric, or they may call it utility replacement excise tax or utility replacement. That should be kept separate in your accounting and put onto line 6, utility replacement excise taxes. Otherwise, the other items under the other city taxes sections are utility franchise tax. So if you have a franchise tax on a water or on a power utility or a telecom utility inside your city, those revenues that come in off of that go under the utility franchise tax. Pari-mutuel wagering, we don't have much of anymore. That's the racing, horses. We don't have any dogs anymore, but horse racing. So if you get some of that, that's where that goes. Not many of you will have to deal with that. Gaming wager tax, some of you will if you're in a county that has legal, or if you're a city that has legal gambling in your local area, you'll get some gaming wager tax money. So that would go onto the gaming wager tax line, usually under the general fund. Mobile home tax, like I said, is not, it's a square footage tax on mobile homes. It's not really a tax of the property value necessarily. So it goes onto its own line as mobile home tax. And those are always separated out on your statements as well that you get from your county treasurer, because the county will give you that. Hotel motel tax you get from the state, and that goes on its own line, hotel motel tax. And that may be split into multiple columns because you might put some of it in special and some of it in general, or it could all be in general. Other local option taxes is your local option sales tax. So if you are one of the many cities in the state that use lost, you have that extra penny on your sales tax. This is where that goes. Most lost money should go into the special revenue fund, because lost is a special revenue. It's 121, it's fund 121 in your chart of accounts. So you should be accounting for your local option sales tax for the most part under your special revenue fund. Now, there are some cities who have a local option sales tax allowable purpose statement that was voted on that says, half the money can be used for any lawful purpose, half the money has to be used for this very specific thing. In those cases, some cities choose to recognize that lost income into their general fund right away, that 50% that can be used for any lawful purpose. I'm okay with that if you want to do that on your AFR. Preferable would be put it all in lost and then make a transfer. But if you split it out, I'm not going to give you too much guff about it as long as it's all properly accounted for. Okay. Also on page 2 is licenses and permits revenue. So if you sell a local license for tobacco or for alcohol, buildings, pet licensing, all of that kind of stuff would go under licenses and permits. That's all revenue under licenses and permits of Part B. Part C is use of money and property. This is one that gets complicated for people. Or they don't understand what should go here. So use of money and property is where you've gained revenue off of an asset that the city holds, whether that's cash, land, buildings, equipment. So if I gained money off of an owned asset, so in this case, I've got money sitting in the bank. It's just sitting there in balance until I need it, and it's gaining interest. That goes on the interest line under use of money and property. Okay. If I have CDs that are giving me interest monthly that I recognize, that goes on interest on the interest line, use of money and property, and make sure you put it under the right fund. Most of your interest will go into general, but there's certain interest that has to be held in the fund it's gained in. Sometimes proprietary has to be held there. Always TIF, if you gain interest on a TIF balance, has to stay in the TIF fund. So make sure you're separating out your interest by where it was earned to the point that you have to. But like I said, most of the time, any interest that you earned outside of TIF and sometimes proprietary can go straight into your general fund by law. Rent and royalties is where if you rented out land, you rent land that is owned by the city, buildings that are owned by the city, or equipment that's owned by the city. You rented it out for use, not selling it, but renting it out for use, and the city will maintain ownership. The money you get from those rental agreements goes on this line, rents and royalties. If you have a cell tower that was put onto city land that you gain rent from each month, that also goes here. Wind farm, same thing. If you have a wind farm tower that's put on a rented piece of land that the city owns, that goes here. Any rental agreement. Also going here could be rental agreements, like if you have cabins for around a lake that's inside the city, that's one that commonly comes up. If you have a community building that you rent out for events, the rental fees would go here as well. Those are the kind of items that we're looking for there. Any other miscellaneous use of money and property that you didn't fit onto the other ones that you feel should go there? We have an other line. Under most of these categories, there will be an other line for things that don't fit properly into use of money and property or any of the other categorizations. So make use of that. If you don't know where it goes, but you know it's a use of money and property, put it on the other line. That's fine. Okay. At the bottom of the page, we get into the intergovernmental section. Intergovernmental money is money that's shared between governments. So if it's intergovernmental, it means that some other government paid it to you and you are then using it. So this first section is federal grants and reimbursements. So if you received money from the a grant or reimbursement money, not borrowed money. So if you borrow money from the USDA, that goes on a separate line we'll talk about later. But if you got a grant from the USDA for their rural housing initiatives or for their rural utility initiatives, if you got straight grant money that you're not going to have to repay, it goes here under Section D at the bottom of Revenues, page 2, under federal grants and reimbursements. There's separate lines for separate items that come in, and then we have some blank lines at the bottom where you can enter it if we don't have a specific line set up for it. CDBG money, so community development block grants that you get from the Iowa Economic Development Authority, those are actually federal dollars, and you should treat them as federal dollars on the report. They should be the CDBG, instead of reporting it under state grants and reimbursements, you should report it as federal grants and reimbursements. ARPA money used to come in. Now that's done for the most part. Make sure you're doing your ARPA reporting. HUD money that you might get, or federal DOT money that you might get. FEMA reimbursement dollars go here. If you have federal buildings, you might have a pilot agreement, which is a payment in lieu of taxes that they give you to cover, necessary city services. That would also go here. But it's money coming from the federal government, either through the state as an intermediary or directly from the federal government. And that's what goes into that section. Section D is only road use. There's road use section. So under Section D, top of page 3 is just road use funds. So if you get road use tax money, which every city gets road use tax money, you have to recognize that payment from the state there, because road use tax money comes in the middle of the month. So if you get a direct deposit into your account around the 15th of the month, it'll be as early as the 13th, as late as the 20th. That money is coming from the Treasurer of State's office. It is road use tax money. If you get a disbursement from the state at the very beginning or the very end of the month, so I'm getting it before the 5th or after the 25th, that is local option sales tax money. And that should be counted with the local option sales tax dollars. So know where that money is coming from so you can put it into the right spot. Okay, road use tax money, like I said, comes in the middle of the month, straight from the state, direct deposited into your account. I don't know. I think there's only one city anymore that has a paper check cut to them. Everybody else is direct deposit. So that should come directly into your account each month. Make sure you're keeping track of it, because you have to report it separately under the special revenue fund column on the road use taxes line. That is a special revenue fund. That's the only place it should be reported in the AFR. There's only one place you can put it, and it's under special revenue. So make sure you're accounting for that money separately. Okay. Other state grants and reimbursements is any other money that you're getting from the state government that is not road use tax related. So this could be grants such as RISE, REAP, Iowa DOT road grants, Iowa Finance housing grants, Iowa Economic Development Authority, non-CDBG grants. All of those would go in there. There is a specific line for commercial and industrial replacement payments and your tier 1 BPTC, or now BPTR payments, which is your business property tax replacement. So now we have that 2-tier system, and you get paid back for tier 1. So a lot of times on your statement from the county each month, it'll either say BPTC, some of them still call it BPTC, which is business property tax credit, or tier 1. You would add that together with the line that says CNI replacement or rollback replacement. Those mean the same thing. That all goes onto one line under other state grants and reimbursements, because that is money that the state has given to the county and the county gives to you. They act as our intermediary, but it's actually state dollars that you're getting. And like I said, they're called a bunch of things: rollback replacement, commercial industrial replacement, commercial industrial backfill, rollback backfill. That's all CNI replacement. That's all titles for that. It's all the same thing. BPTC, business property tax credit, tier 1 business property tax replacement, business property tax replacement. Those are all what used to be the BPTC. You add those numbers together and they go on the same line. Okay. There is a dedicated line under other state grants and reimbursements on revenues, page 3. All right. Under other state grants and reimbursements, there's local grants and reimbursements. So this is money coming from a county government or below to the city. So it's any So if you're looking at your hierarchy chart, there is federal, there's state, there's county, there's city, and then there's other below, township and the like. So anything county and below is considered local grants and reimbursement. So if you get money from your county government for library service or for fire protection or for a cost share on a road project, things like that, all of that goes into local grants and reimbursements. Also going in there would be money you get from other cities. So if your city provides fire service or utility service or something else to another city, the money you receive from that city would go in there. Library service is a big one. You provide library service to another city, the money they give you for that goes into this line. Fire is by far the biggest. So if you give fire service to another city or a township, then the money that comes from those them paying over property tax to you. So if your city services a or many townships, they are able to levy taxes to pay for that. They will levy tax and then they will give you those tax dollars. You need to account for it here under local grants and reimbursements. And remember, those property tax dollars should only ever be used for the purposes that they were intended. So if you get fire money for a township, it needs to be accounted for properly and it needs to only be used to provide fire service. Okay, so make sure that you're tracking those properly and you're keeping those balances separated out. Okay, before we go to charges and fees for service, I'm going to answer a couple of questions that are in the queue here. So one is, which page did you say was the one that published in the newspaper? It's All Funds P1. A version of that goes in the newspaper. So make sure that when you do publishing posting, it will create a copy that's a slimmed down version of the All Funds P1, but that's the thing that gets published or posted. Does an amendment need to be done if my debt service has changed? City decided to pay off our debt rather than making payments. Yeah, an amendment to the AFR or the budget would be my question. Yes, you'd probably need to do an amendment to the budget. If the AFR is your actuals from the prior year. So you shouldn't have to make an amendment for that based on debt payment because you should already have recorded that actual correctly. But if you need to make changes, yes, we can amend the AFR, but I think that's more of a budget question. Is it okay if we include the mobile home tax with the general taxes collected? Don't do that, separate them out, would be my answer. If you've done it in the past, don't worry, just start doing it correctly going forward, would be what I would tell you. Because you should keep track of that separately, because that is not, strictly speaking, a property tax. It is a square footage tax. So we're not taxing the value of the property, we are taxing the square footage of the property. So it's a bit different. If you lump them all together, the police are not going to come and grab you off the street and throw you in jail. So don't worry about that. But I would keep them separate going forward and just make sure that you're doing that. Okay. So it's not a case of go back and separate them out. It's a case of just do it right going forward. All right. Charges and fees for service is where we get a little bit more complicated. Everything else is pretty straightforward, right? You've got a dedicated revenue source that's coming in. We give you dedicated lines to put it on. The big things you need to worry about is, did I get it in the right column for the fund that it went into? Okay. Starting with section E, charges and fee for service, things get a little bit more nebulous. Charges for fees and service are items that they're items that are business type activities, right? So you are charging a fee and providing a service, okay? So a lot of these things bleed over between funds because they can be things that are utility costs. You charge a fee for service in your utility. Those are pretty straightforward. You charge parking rates, that's pretty straightforward. If you own a telecom and you charge that utility fee, again, very straightforward. Those are charges for services you provided. But a lot of times you don't think of recreation fees as charges for fees or charges for services provided. But if you have a pool and you charge entry into that pool, that is a charge for service. So, or a charge for a good that you provided. Those are the kind of things that get entered here. So it's where I am providing something, some service or good to a user, and the user is paying me a fee for that. That's what we want to go in section E, charges for fees and service. This bleeds over from page 3 to page 4. So the section E starts at the bottom of page 3. Now, this is where it gets very tricky. You want to make sure that you're putting it in the right column, because if I own a utility, so I own a water or sewer utility, and I'm collecting a fee for that water or sewer utility, that goes into proprietary on the far right, into the proprietary column. But if I don't own the big one is garbage. So if I don't own my garbage system, so I don't own the dump, I don't own the trucks. I don't pay the workers. I have a contract. They haul it to the county waste facility. Then that is all general fund. I am just a paying agent. People pay me. I pay someone else. That is a contractual agreement that goes in general fund. But if I own the trucks, or I pay the workers, or I own the waste facility where it ultimately ends up, then I have to charge that under proprietary because I own part of the system that is providing the service. Okay. So you need to make sure you know where it needs to go based on where you provide it, or who's providing the service, I should say. So if you don't provide the service, you're just the paying agent, general fund. If you do provide the service, meaning you own the system or maintain the system that is giving the service, goes under proprietary. Okay. It's the most important thing to remember about fees for charges and service. Otherwise, you are basically just reporting the money brought in from the monthly billings or the gate billings if it's a recreational activity. Okay. So don't get confused there. Going into page 4, after we get through the charges for fees and service, there's special assessments. And a special assessment is a splitting of the cost amongst the area of the city that's going to benefit from an improvement. So if you're putting in new sidewalks in a neighborhood, there is a methodology that can be used by the city to charge some of the costs of putting those improvements in that are really only going to benefit that area as part of their taxes. This would get taxed along with the property taxes every year by the county treasurer. That gets separated out and put into special assessments. Make sure you don't put it in with your property tax payments. They will come with your property tax payments, but on that statement, it'll say special assessment this much. Make sure you're accounting for those separately, and you're accounting for them as special assessments and putting them on the special assessment line. Most of the time, special assessments either go into proprietary or into capital projects or general. Those are the three kind of that you see. Usually it's general or proprietary. So just make sure you're putting them into the right spot. Sometimes it may go into debt service because you're repaying a debt with those fees. So let's say I went and floated a bond for redoing some road work or some street work that is going to be paid partially by special assessment. When that special assessment money comes in, I might dump it right into my debt service fund, so I have it available to go pay that bond. So make sure you're putting it into the right fund based on how it's going to be used or how it's legally required to be used, because how you approve it may have an impact on where it needs to go, under which column. Okay. Miscellaneous is kind of a catch-all. That's at the bottom of page 4. There's certain items that have to go into miscellaneous, but then anything else that doesn't fit neatly into any of the other categories can go into miscellaneous. Items that have to go there are things like contributions or donations. So if you got money from a private or public source that is not governmental. So if the county gives me a grant, I show that as intergovernmental under the local grants and reimbursements line on revenues page 3. But if my local community betterment foundation, like the Iowa West Foundation, or some of the casinos have their own foundation where they give out grants, that is a non-governmental source. So that goes under miscellaneous. Okay. So that's a contribution donation that goes under miscellaneous. If you get a dividend from your insurance company, sometimes you will get a dividend, or if you get a claim reimbursement from your insurance company. So you've made a claim for damage to one of your buildings or vehicles and they paid you out, that's miscellaneous as well. Those are kind of the biggest types of miscellaneous. If you have a settlement where you sued somebody and you won, the city sued a citizen about their nuisance property or something like that, and there was a monetary settlement, those dollars, when they come in, those settlement dollars should also go under miscellaneous. Those are the kinds of things that go on the contributions line. There's also a line for deposits. So if I receive water sewer deposits for starting service, those deposits would be recognized under the proprietary fund, but on the deposits line under miscellaneous. The big one that gets missed is any fines issued by the city. So if you have speeding tickets or traffic cam tickets, or you have fines against a property code violation, or you have a fine for a dog that got loose that had to be picked up by the city, or any other type of infraction that had a monetary cost to the citizens that was paid to the city, that goes under miscellaneous. There's a separate fines line that you can enter it on. Okay. If you sold merchandise that was low value, so if you had Things available like garbage pickup stickers at your city hall that you sell so that people could put them on on their large items for garbage pickup. That's a big one here in the metro. That would go on miscellaneous. If you sell some items out of your city government building that are just general use items like lawn waste bags, things like that, that would also go under miscellaneous. So if you're selling small items, miscellaneous. If I sell a car or a building or land, that does not go under miscellaneous. That will go under other financing sources on the next page, on revenues page 5. So that flows us right into that question, or right into that page. So revenues page 5, proceeds of capital asset sales is big items. So when I sell what we call real property, meaning vehicles, land, buildings, there we're talking about, or large equipment like construction equipment, plows, things like that, tractors. Those would all be big purchases of real property, what's recognized by the IRS as real property. So that goes under proceeds of capital asset sales rather than miscellaneous, right? Proceeds of long-term debt is if you borrow money. So if I borrow money from the USDA, I put it here on proceeds of long-term debt. If I borrow it as a water revenue, I put it under proprietary. If I borrow it for housing, I might put it under either general or capital projects, depending on what it's being used for and where it's coming from. But if you're borrowing money, it goes here. If the USDA is giving me a grant or the SRF is giving me a grant, that goes under intergovernmental, either federal grants and reimbursements or state grants and reimbursements, depending on who's giving me the money. Okay, so you have to separate those two out, because a lot of times if you do like a water or sewer project in a small rural city, part of it will be grant money from the USDA or from SRF. Part of it will be borrowed money, loaned money from the USDA or SRF. So you got to put those two separate things on two separate lines and make sure you get them correct. Borrowed money goes back here on revenues page 5. Proceeds of anticipatory warrants or other short-term debt is if you get money, you borrow money for like a construction loan or a planning and design loan through the state revolving fund, the SRF. Those would be short-term because you're never going to pay that money back with monthly payments or yearly payments. It's going to be assumed into a bigger debt that comes later. So that's considered short-term debt. So if I borrow planning and design loan money or USDA construction loan money, that gets recognized here under proceeds of anticipatory warrants and other short-term debt, rather than being on proceeds of long-term debt. Okay, small but important difference, because this tells us long-term debt means I'm going to repay it over the next several years. Short-term debt means I'm either going to repay it within the next year completely, or I'm never going to repay it. It'll be assumed into a larger debt that I will then repay, which will be a long-term debt. Okay, so don't get those mixed up. If you have questions about those, let me know and I can help you out. Other financing sources items are your transfers. So transfers are money moving from one fund of the city to another. So if I take money out of my general fund and I put it into my debt service fund to pay a debt, that's a transfer. For every transfer in, there has to be a transfer out. There are two types of transfers you can make. Money coming from or going to the TIF fund, that gets put on the lower line, the internal TIF loans and transfers in. So if it's money moving to or from TIF, it goes on a separate line. Everything else goes on the regular transfers in and interfund loans, okay? So if I'm moving money between funds, that's where I put it, because that's not money that's actually leaving the city. So we don't count it as an expenditure per se, but it's kind of a expenditure adjacent or revenue adjacent, right? So we put it in as another financing sources because it is money that you're bringing in, but you're bringing it in from another fund, and this helps us recognize that. The biggest thing I need you to remember as new users of the system or as short-term users of the system is line 134. So below your other financing sources, there's line 134 on revenues page 5. This is where you enter the beginning balance of your funds by fund for the year. So July 1, how much money was in each fund needs to go on line 134 of revenues page 5. Say beginning fund balance July 1, comma, and this year it'll say 2024. Okay, so I need you to enter the amount on July 1, 2024 in this case that you had in each fund. And that includes, remember, all accounts, checking, savings, money market, CDs, investments, everything added together, split out by fund. Do not just keep all of your money. If you're a smaller city, there's a tendency to keep it all in one pot and just call it all the same pile of money. Doesn't work that way with governmental accounting. Works that way in the business world. In the business world, you bring it all into one pot, you spend it all out of one pot. Governmental accounting is different. We have to track balances, revenues, and expenditures by the funds in which they are earned or spent. Okay, so make sure that you're keeping this fund balance, this beginning fund balance, separated out by fund, and that you enter it on line 134. I can't put an error message into the system for having a 0 on line 134, because technically you could start your year with $0. You could have balanced out to the penny expenditures and revenues in the previous fiscal year and had no money in the bank on July 1 until you started making money again. That could happen, theoretically. Will it ever happen? No. But I have to prepare for theoretically possible, not reality. So I don't put an error in on the AFR to tell you you haven't entered it. You just need to go and check it and make sure that you enter it, because you are allowed to submit an AFR with zeros on line 134, but you shouldn't, because no city will ever really do that. Okay. All right. Before we go into expenditures, let's address some questions. So I have a generic question of what about franchise fees? Franchise fees go on the utility franchise tax line up on revenues page 2. So if you are bringing in franchise fees, that's where you would report it. Generally, you report it either under the general fund, the proprietary fund, or the special fund, but it goes under the utility franchise tax line. Franchise fees, franchise tax, same thing. So make sure that you are reporting that on the correct line. Let's see, where would I put my bingo money that received for a game that the city runs? So that would be under miscellaneous. You'd put that under either miscellaneous, or you could put it under charges for fees and service, depending on how the money is used. It's probably, since that's recreation, it really could go either way. You could put it on revenues page 4 under the fees for charges and services, a recreation fee, or you could put it under miscellaneous. Either one would be sufficient. My city's fire department took out a loan with the city's EIN number, as they should, because they're a department of the city. City funds are not being used, only funds raised by the department and the fire board. So do I need to record that on my AFR? Okay. This comes back to that question we had earlier about the difference between an association and a department. So your fire department gets super murky in a lot of instances because the fire department wants to keep its own checking account. It does not consider itself part of the city, though it is, unless they have legally separated and become part of a 2080 organization. They are part of the city, okay? They're going to think otherwise. They're not. Their finances need to be part of this AFR and part of the budget, and they need to stick to their budget or have the council do an amendment during budget season. But all of their revenues, expenditures, and balances need to be reported on the AFR for the department. Now, they'll have an association that is a 501c3 organization that is separate from the city that raises donations for them. That may be the organization that runs like their pancake breakfast or their chili supper that raises money for the fire department, and they may have a separate checking account for that. If they use the city's EIN number, the money from it needs to go into their city department account that gets tracked on the AFR, because you cannot take money, public monies, and give it to a private source without any oversight. Okay, so make sure that you are keeping the grant money that they got, or the loan money that they got in this instance. That money has to go into the city's accounts and then be spent out of there and be reported on the AFR. If they have donations that came into their association and went into the association's checking, you do not have to recognize those on the AFR in the budgeting until the association donates them to the city. That's the caveat. So as long as it stays in the association's checking account, you don't have to account for it. But if it's property tax dollars, like money coming from the township, that should never go to the association. If it's property tax dollars that came into the city that was given to the fire department for expenditures, that should never go to the association. Public money stays with the public entity and it gets reported on your budget and your AFR. That's kind of how you figure out where it needs to go. Any activities where they're using the city EIN to get a grant or to get a loan or some other type of support, all of that money needs to flow through the city, through the departmental accounts, not through the association's accounts. They want to keep everything off book a lot of times in the association, because then the city council can't have a say on how they use it. That's not legal if it's public money. Public money stays with the public endpoint or the public source. Okay. You're going to have a lot of questions around that as the year goes. Feel free to ask them. We get them every year. That's one of the biggest points of contention is fire departments or libraries, because they both have these associations that go with them for fundraising, and they like to mix money back and forth. They should not. 501c3 should be responsible for donated money only, and only money donated to the association. If someone writes a check to the city for a donation, the city needs to keep track of it. Don't give it to the association. Another question came in. What about fire department who also has a separate 501c3 and they use their 501c3 dollars to purchase and then ask for reimbursement? No, that has to be approved ahead of time, and the city should be making a purchase. So if there's a purchase that needs to be done of using city money, using public funds, the city needs to make the purchase, and then the 501c3 can reimburse as necessary into the city, especially if it's going to be something owned by the city. If they're buying a truck or they're buying supplies or equipment, that needs to be either money donated to the city and then purchased, or they can make the purchase and then donate it to the city. But there should never be money flowing from the city to the association. It only should flow one way, association to the city, because the only reason the association exists is to support the function of the city, not the other way around. So you should never, just in broad terms, never give public money to a private entity of which you have no oversight. Okay? All right. There will be many variants of this question over the year. Don't worry. Just ask me or ask the Auditor of State's office is a great source on this. Ask the Auditor of State's office questions. It's not going to bring the heat down on you. They're generally not there to be gotcha. They're there just like I am to educate and try to get you doing things correctly. Okay? Is there somewhere we can get this association city division in writing to show our fire department? I would ask the city, or I would ask the Auditor of State's office if you have specific questions about the division of how things are done. Ask them, and they usually will provide an opinion in writing about where the division is, where the dividing line is. So you can talk to Pam Borman or Brian Bruskern, excuse me, at the Auditor of State's office, and they should be able to work it up if you have specific questions. I don't know if they may have guidance about that, just general guidance. You could ask them, but I haven't seen it if they have it, but they may have it that they use internally during audits and can provide that to you. So they'd be the best place to look for that. All right. Any other questions about revenues? Bring them into the Q&A. Otherwise, we're going to move on to expenditures here. So first 4 pages, not counting the all funds P1, which is a summary, but the first 4 pages of entry are revenues. Make sure you address every single page, because you may have to enter something on every single page. There is no guarantee that you will put a number on each of those pages. Remember that. Okay, don't get freaked out if you see a lot of blue spaces. That's normal, especially if you're a smaller city. Okay, so the next set of pages, the next 4 pages, from expenditures page 6 or expenditure P6 through expenditure P9 is where you will enter the money leaving the city, your expenditures. Okay. Expenditures are entered by the program or the department from which they are spent. Okay. That's how we have on our overlay. Revenues we enter by fund, and then by what was the revenue type, where did the money come from. So you use the 4-digit code at the end of your chart of accounts number to tell you which line it goes on to. It's different for expenditures. For expenditures, we still put it in by fund number at the top, but then we put it in on the side by what program, so what expenditure program was it spent out to support. Okay, so each line of the AFR will have a program number that is in reference to it, or nearly each line. I mean, obviously, the ones that are blank others, we're not going to have anything for those. But we have every other line. If you look at this, is expenditures page 6, and then we go to expenditures page 7. They are all delineated by a program that they are spending money for. Then page 8 and page 9. It's all delineated by a specific expenditure program. Okay, so each way that a city can spend money legally gets a number assigned to it, and that's called the program. Right? Public safety is your 100 level programs, so it's basically 110 to 199. Public works is 200 level. Okay, 300 level is your health and social services. So a lot of you will never touch this health and social services 300 level. 400 levels, culture and recreation, 410 to 499. Remember there that cemetery operational expense and community center operational expense are considered culture and rec. It's not just parks and trails and swimming pools and things like that. It's also, it could be golf courses. It could be community centers. It could be zoos and marinas if you have a zoo or a marina. It's definitely cemetery. So if you have mowing expense for a cemetery or upkeep expense for a cemetery, that goes here under culture and rec. Next is 500 to 510 to 599 is community and economic development. Now, a lot of people question what goes in community and economic development. It's a bit of a catch-all. So if it is an expense that you have for beautifying or upkeep of your city that is not specific to a single department, it can go here. If it's housing related, it goes here. If it is economic development related, meaning trying to get more business or property value in your city, it goes here. The big one that goes here that a lot of people miss is TIF rebates. So if you pay out a TIF rebate agreement where a company has come to the city and said, we want to do this improvement, which will bring up our property value, but we need money up front to help us do that. And the city says, sure, we'll give you back some of your taxes paid. That's a rebate agreement. That goes on a specific line under community and economic development. Okay. All of your planning and zoning costs. So anything that's planning and zoning related goes under community and economic development. So give that a look. There's a lot of things that could go there, but most of it has to be related either to improvement of the community or improving your economic development. Those are the kinds of items that go there. General government is the biggest catch-all because that's where most of the wages of administrative staff, council, mayor, city manager, city clerk, all of that goes under here, counts the wages and benefits. All of your building upkeep for non-departmental specific buildings, so like your city hall, your community, if you have a joint building, so it could be city hall, community center, fire department, you might have to separate it out. But those general building upkeep goes here. Your cost for your legal fees go here. So any lawyer expense that you have. Your tort liability insurance goes here for your just general policy. If you have departmental specific policies or the department pays part of that cost, then you should put those out into the department cost centers on those individual lines. So like if I pay a tort liability policy that covers the entire city, but we charge part of it to the police department, part of it to the fire department, part of it to the utilities, then all of those should catch a piece of it. But the part that doesn't get sent out to all of those other departments gets put under general government. A lot of commodities purchases, paper, printers, computers, things like that will go under other general government. And then election costs is the other kind of big one every other year. It's kind of the big one where you'll have the cost of running an election that the county can charge to you. That goes under there as well. Debt service is only repayment of debt. That's the only thing that should ever be entered as an expense on this line is if I am paying money to repaid money that we had previously borrowed goes on this line. Okay, the expending of money that we borrowed does not go on the debt service line. That goes on capital projects or a departmental line. So if I borrow money in to buy a fire truck, that would either go in on the capital projects, gov capital projects line, or it would go on the fire department line. It would not go under debt service. Debt service is just repayment of debt, money going out to pay principal and interest for debt that you already have. Okay. Capital projects has two different flavors. So there's general gov capital projects, which is anything that is not going to be repaid by TIF. And then there's TIF capital projects, which are projects being done, the money spent towards projects being done that will be reimbursed by future TIF revenues. Okay, so put it on the appropriate line based on where is the repayment source going to be in the future. Right. Business type enterprise activities. That is all of your user fee-based activities where you have an expense. So water, sewer, gas, electric utilities, telecom utilities, parking system. Your community center can be here if you are, if more than 50% of the revenue of the system is not property tax, it's user fees, then you could account for the expenditures here. Stormwater, that's a bigger one that's coming on. Ambulance service, if you run an ambulance service, that is generally fee and reimbursement supported, that can go under here too. So there's a bunch of different things that could go under business type enterprise, but it's expenditures out activities that are supported by fees mainly, or supported by non-property tax sources. Okay, that's what we're looking for here. And also under the business type enterprise, most of these, if I bring it up again, you can see most functions have only one line associated with them. But if we go to page 8, you'll see water, sewer, electric, gas. They have 3 lines apiece. So remember, when you're doing business type enterprise, we want you to separate out how much was spent on debt service repayment. So how much of my money went to repaying debts that I owe out of the water system. Capital outlay. So how much of my money this fiscal year went to one-time high cost projects like water main replacements, or you built a new drinking water facility, or you built a new sewer service facility, you built lift stations or pump houses. All of that stuff would be considered capital outlay because it is non-reoccurring, meaning you only do it once every number of years. You don't do it yearly. Put that on the capital outlay line. Everything that's kind of a yearly cost, wages, regular maintenance items, commodities purchases, new equipment purchases, those can go on current operations line. So we're just kind of trying to stratify to see what is a yearly cost, what is a non-yearly cost, and what is a debt cost. So make sure you separate those out onto the separate lines. Each of these business type enterprise activities have at least one extra line that you have to deal with. But make sure that you're using those lines and you're not just dumping them all onto current operation. The Census Bureau in particular wants to see that information for some of their studies that they do in tracking the fiscal health of especially rural communities, but also urban communities. Transfers out goes on the bottom lines of expenditures, page 9. Again, like I said, every transfer in has to have a matching transfer out, because transfers are money not leaving the city. It's money moving from one fund of the city to another. So if you are transferring money between funds, you should have a transfer in on the revenues, page 5, and you should have a matching transfer out on expenditures, page 9. So if I'm moving money from general fund to debt service to pay for a debt, I should show the same amount coming out of general on expenditures, page 6, on the transfer outlines, and then I should show it going into debt service on revenues, page 5, on the transfer in line. Okay, so make sure that those are always in balance. If you're not in balance, our system will throw an error code at you when you do your check errors. Okay, so this is again, that's transfers, just money's moving between funds, but it could also be loan repayments if you did an internal loan. That's what the note at the bottom is about. If you do an internal loan and you have one fund repaying another fund for money that was borrowed previously, that still counts as a transfer because it's not money leaving the city. So you still put it on the transfer lines. Okay. All right. The bottom of expenditures, page 9, has a set of lines that are used for stating my ending balance, how restrictively is it being held. Okay. Under GASB 54, this was put in place for you to say, out of all of the money that I'm holding in this fund, how much of it is being held at each designation level is what we call it. It's designated funds. So you can have money that has no specific purpose given to it yet. You could have money that has a very specific purpose given to it and can only be spent legally certain ways. The bottom of at the bottom of expenditures, page 9, P9, you're going to have to show us that. Okay. Line 1, that's going to be lines 140 through 144. Line 147 is your actual full ending balance that we're going to be dissecting on lines 144 or 140 through 144. So line 147 is calculated ending balance. And this is ultimately, at the end of the day, what you should be tying out to your internal accounting documents and saying, by fund, does this line 147 calculated ending fund balance tie out to the amount that I say I have in my fund in my internal accounting reports. Okay, so if your line 147 doesn't tie out to the ending balance of your general ledger or accounting software, you need to immediately stop because you've got a problem and you need to start looking at your other inputs. Number 1, make sure that you put something on line 134 of revenues, page 5, for beginning balance. Because if you get to line 147, you've entered all of your revenues and expenditures, and we get all the way down to line 147, and I'm not tying out to the ending fund balances I have on my system, my ending balance is way lower than what I have in my system, that means I'm probably missing my beginning balance on line 134 of revenues, page 5. Okay, so make sure that you are are checking that. But then also you could have a difference in revenues or expenditures to what you have in your system. So don't just go through with a line 147 ending balance that doesn't match what you have internally. Stop and look through your beginning balance, your revenues, and your expenditures right away. You need help with that, let me know, and I can try to assist you. There's also resources at the league. Teresa there is a great resource who can help you potentially unscramble your numbers a little bit. If you're new to the AFR, you're not probably going to tie out exactly on your first try. You will probably have miskeyed something unless you have great software that uploads into our system automatically and has been kept up to date and balanced. Balancing every month is super important to get this line 147 number to come out right the first time. If you balance every single month and you do your reporting to your council like you should, your treasurer's report and your cash report, you get those tied out every single month, then this will be a breeze, and your 147 will come out perfect every single time unless you've made an entry here. Okay, so make sure that's another little advertisement. Make sure you're doing your monthly balancing. Like I was saying, you have to then take that line 147 ending fund balance once it's tied out. So once you're sure that it matches what you have in your internal accounting software, and we have to take those balances and say, okay, out of this amount on line 147, how much of it is non-spendable, restricted, committed, assigned, or unassigned? So we're not putting in new numbers. We're taking the line 147 balance and saying, out of that balance on line 147, this much is non-spendable, this much is restricted, this much is committed, this much is assigned, and this much of that balance is unassigned. 140 through 144 should add together to equal line 147. Okay, so line 140 through 144 totals onto line 145, and then line 145 should equal line 147. Because what we're doing is taking a balance and breaking it out into categories. We're not adding new money at this point. Okay, so you're probably wondering what those categories mean. So here is a breakout of what those actually mean. Non-spendable cash is cash that you can't spend legally or contractually. You're required to keep it intact. A good example of this that some of you might have is what's called a perpetual care fund. So if you have a perpetual care fund, that means some citizen or entity at some point gave the city money for upkeep of a city activity, whether it's usually it's a park or the library. It could be one of your departments, like fire department sometimes gets them, not often, but sometimes. But it's somebody gave a bequest and they said, all right, I'm going to give you this principal. I'm going to give you $100,000, but you're not allowed to spend that $100,000. You have to keep that and invest it. And then you can spend any interest gained off of that investment. That is a non-spendable cash item. That $100,000 initial amount is considered non-spendable. Okay, I have to keep it legally or contractually, right? Restricted cash is one level down from that. So this is money that comes in, but I can only spend it a certain way by law or by contract. I'm allowed to spend it, so that makes it not non-spendable, but I have to spend it a specific way. So restricted cash is road use tax money. It's some forms of property tax dollars. It is local option sales tax money is considered restricted because you approve how that can be spent by an allowable purpose statement and a vote of the people. A lot of your grant monies that you get that come in will be restricted cash because you can only spend them for the purpose that was approved under the grant agreement. Any leftover money or any money that you received from a loan that you haven't spent yet, you go to the bank or you go to the investors and you say, I need to borrow money for this specific purpose. They give you that money for that specific purpose. You then have to keep that money to that specific purpose. So if you have money that you haven't spent yet, let's say you got a payout of your loan in June and then the year turned and you hadn't spent it yet, that would be restricted cash at the end of the year. Okay. Because legally you have to spend it a certain way. Committed money is money that has been it's had its use set by a resolution or an ordinance of the city council, of the full city council. So the council did a resolution to say, we want to take this $100,000 sitting in general fund and put it towards this park project. And they passed a resolution obligating it. Then it becomes committed. Up until then, it's either assigned or unassigned. Assigned means that they used a motion or less action of the city council to assign that money to a purpose. So if they just assign that $100,000 to the park project, but they only do a motion vote, that becomes assigned money, not committed. Committed is if they use a resolution or an ordinance. Unassigned money is where most of your general fund money will probably sit. It's money that was brought in but does not have a specific purpose yet. Okay, so those are dollars allowed to be used for any lawful purpose of the city, and they haven't been given a purpose yet. Most of your permanent fund will be non-spendable. Okay, most of your special revenue fund, TIF special revenue fund, debt service fund will be restricted cash. Okay, a lot of your capital projects fund and some of your proprietary fund could be committed, meaning it's got a project that it's been committed to. Assigned can really be anywhere, and unassigned will be mostly general fund, but also if you have a negative balance in a fund. So let's say my debt service fund, for whatever reason, is negative 10 grand. I have to put that as unassigned because you cannot assign a negative balance. So all negative ending balances are unassigned. Okay. Proprietary, you don't have to parse out yourself because that already parses itself. It's all treated as proprietary. Okay. So just keep it proprietary. That will account for itself on line 146. You don't need to do anything. Okay. Again, it totals down to line 145. Line 145 has to match line 147. If it doesn't, it'll throw an error. Okay. So watch for errors there. All right. That's expenditures in a nutshell. You're really just reporting how you spent your money by the program under which it was spent. Much simpler than revenues. Quick question came in through Q&A, said, would a perpetual care fund on a cemetery go in non-spendable? Yes, if there is a part of the balance that can't be spent. That part has to be non-spendable. So if someone gave the cemetery fund an amount of money that they want to invested, they gave you a perpetual care, that generally is non-spendable. There are other forms of perpetual care where you can spend down the principal balance, but you can't spend it until a certain number of years has elapsed. It becomes non-spendable until you're out of that time period. So make sure that you are watching that. Monies that come into the cemetery for like buying a plot or something like that would not be considered non-spendable. That would be spendable dollars usually, unless your city has some other designation that they've made on those dollars. So cemetery kind of goes both ways. But if you get money into a perpetual care from a citizen who's left it and said, don't spend the principal, that's perpetual care. Where would we report USDA required reserves that can't be spent without USDA approval? That's part of your beginning fund balance, and you report it as part of that beginning fund balance, and then it doesn't get reported anywhere else. If you have like reserves, let's say you have a sinking fund that you have to keep throughout the year, you're moving money from, like, let's say you did a sewer debt with your USDA, and they require you to keep a coverage of 110%. The money that you transfer into the sinking fund every month or that you put into that reserve account, that is a transfer, and it's only one time. It's only when you do it. So you could show it as a transfer from proprietary to proprietary, and that would show the money moving out of proprietary operations and into proprietary sinking. So that's what you would kind of handle there. Let's see. Where did you say debt balance should be? So if you've borrowed money that you have not yet spent, you should be putting that on the restricted line, because legally it can only be spent for the purpose that it was borrowed for. So that's just cash that you're carrying for your project that you just haven't spent yet. You borrowed the money in 1 year, you didn't get it all spent before the end of the year, so you had some cash sitting in balance yet that you're going to spend in the next fiscal year. At the end of that first year, it would be considered restricted cash. Or you could consider it committed, but restricted would really be if it's borrowed dollars. I would consider that restricted because you can't legally spend it on anything else, or contractually you can't spend it on anything else. You borrowed it for a specific purpose. Okay. Let's talk about other P10. So that's revenues and expenditures done. You should make sure that you tie out, you should make sure that you tie out in terms of beginning balance, revenue total, expenditure total, and ending balance before you move on to other P10, okay? Because that's the meat of the report is revenues P2 through expenditures page 9. You're putting in the yearly amounts of actual revenues and expenditures and balances. So make sure that you have all of that tied out before moving to other P10, and make sure you have your ending balance tied out before you do the designations on line 140 through 144. Otherwise, you're just going to end up redoing it as you change your balances. Okay. Other P10 is very similar. You don't want to do this until the end, until you've got all of your revenues, expenditures, and balances locked down, because that could change some of the information that you enter into the other P10 page. Other P10 is not going to go anywhere else in the report aside from the debt piece of this will still go through to the all funds P1 tab, which is that summary page that gets published or posted. But most of this is a breakdown of information you've already provided. So from revenues page 2 through expenditures page 9, you've already given us all of the revenues and expenditures of the city. What we're trying to do on other P10 is take those amounts that you gave us on those other pages and give them a little bit more specificity, right? So you gave us bulk totals. Now let's take some of those bulk totals and turn them into more granular data, more granular information. So the first section that you have on other P10 is payment to other governments, right? So if some of the expenditure that you have reported on expenditures P6 through P9 was money that you were paying to other local governments, state government, or federal government for a service or a cost share for a project, that needs to also be reported on other P10 to show how much. So on the left-hand side of part 3 of other P10, there's money that was paid to other local governments for a service or function, right? There's corrections, health. So corrections means jailing. Health, so that's if you have a health or social service that you share with another city and you cost share. Highways, so if you paid the county for some highway maintenance or for some highway improvement. Transit subsidies, so if you paid in from your city to another city because they had busing service that comes into your city, that would be considered transit subsidies. Libraries, so if you don't have your own library, if you don't have your own library, you don't have your own library, and you paid another city for their library services to service your citizens, that would go here, the amount you paid to them. Police protection, if you paid the county sheriff through a 2080 agreement, or you paid another city through a 2080 agreement for them, for their police department or their sheriff's department to provide that service to your city, that cost would go here. Sewerage or sanitation, if you paid another city or the county money to cover your sewer needs or your solid waste needs, so picking up your garbage and recycling, things like that, that would go on those lines. And then any other payment that you made to a local government for some type of service would go on the all other line. Okay, and this is only services from other local governments, other cities, other townships, other counties. Okay, that's what we're looking for here. On the right-hand side of part 3, you're going to have services stuff paid to the state. Okay, so if the state provided you with a service or you had cost sharing on a highway project with the state, that money would go in here. Okay, this side will get used very rarely. You don't generally have a ton of cost sharing with the state unless you're getting highway work done through your city, then you might. Okay, but otherwise you generally don't have a lot of cost sharing with the state. You will probably have something to enter over here if you're a smaller city and you don't provide your own services, right? So if I have the sheriff protection, I'm at least going to have police protection entered. So most of you who are smaller, who have outside sources, other local governments providing you with services, you're going to be entering something here. And again, this is information that I should have already entered. Like, for instance, my police protection number should also already be entered on expenditures page 6 under police protection. I'm just taking that number and I'm parsing it a little bit to say, all right, I entered $5,000 for police protection on expenditures page 6. Here I'm saying that out of that 2809 of that $5,000 went because I had a contract with the sheriff's department for police protection, that sort of thing. So we're breaking down that bulk number into a smaller piece. Okay. All right. Right below the part 3 sharing with other governments is wages and salaries. So part 4 is where you enter the gross amount of wages and salaries paid to your employees, to all city employees, regardless of department. So if you give a paycheck to an employee or a volunteer, or if you pay them in any sort of way, we want to know the gross amount for the year. So the gross amount would be before deductions. So before you remove their FICA and IPERS, before you remove their premiums paid to benefits offered by the city, what is the gross amount that they were paid? That's what goes here. So that also includes the council and the mayor. That includes any payments to volunteer firefighters that were related to wages. Because sometimes there are things that volunteer firefighters will do that will get wages if they work some sort of festival or something. So make sure that you're counting all of those part-time employees, full-time employees, seasonal employees, all of them go on here. Okay. And it's just for this fiscal year. So from July 1 of the reporting period through June 30 of the reporting period, how much gross wages? So before any of the deductions were taken out, how much were they paid? Most of you who have accounting software, this will automatically be calculated for you by the system. Okay. Below that, there is a long-term debt matrix that you used to have to fill out by hand that is now filled out using another page. We have actually eliminated some work on this page and increased work on another page that is brand new. So there's now a city debt detail page that we'll go over here in a minute that you have to enter granular debt data into per House File 718 passed 2 years ago. That information, when you put it on the city debt detail page, will flow into this matrix automatically. So no longer do you have to address the long-term debt matrix that you see at the bottom of the page on other P10. It'll come in from the city debt detail page. You do still have to enter short-term debt right below it. So there, part A is long-term debt. Part B of Division 5 or Part 5 is the short-term debt. So if you have debt that is, again, these are bridge loans, construction loans, planning and design loans. So loans where you're getting money to do a task that's going to be rolled into a larger debt later on. That's a short-term debt. And you need to put the amount that you had outstanding on these as of the beginning and the end of the fiscal year in these two blanks. Those are still need to be filled in on other P10, and they'll flow through to the all funds P1 page once you enter. Okay. And it's the yearly beginning and ending principal balances only, not interest, just principal. Okay. All right. The bottom of the page, part 7, is the outstanding, your ending cash balances. So the money that you have in the bank at the end of the year, all of your checking, savings, CDs and investments, money markets, all of it added together. We want you to break it out into what kind of obligation is on it, or what is the usage that's allowed. Okay. If you are a cash basis city, the amount that you enter here should equal the same amount of ending balance that you had, or be higher than the same amount of ending balance that you had on line 147 of expenditures, page 9, the ending cash balance by fund. This might be higher than that because you could have you could still have in your bank account money that was already recorded in your general ledger, but the check that you wrote hasn't been cashed by the counterparty yet. So this balance could be slightly higher than the balance on 147 if you're a cash basis city. It should never be lower. Okay. The accrual basis, you probably won't match at all. It could be higher, it could be lower, just depending on how the accruals went that year. So just bear that in mind. Okay. Other P10, what are on the cash and investments of other P10, we want you to break it out, like I said, by how it's being held. What is it being held for? There's 4 different categories. Bond and interest funds means that you're holding money for redemption of a long-term debt. Okay, so if I am saving up money to pay off a debt, or conversely, if I refinanced a debt, but I did what's called an advanced refunding, meaning that I won't be paying that debt off for another year or 2, but I already have the cash on hand, I have to show that as bond and interest funds. Okay. Bond construction funds are borrowed dollars that have not yet been expended towards the project they were borrowed for. So in that instance where I had money that I borrowed in June of the year and I still was holding it at the end of the fiscal year and I hadn't expended it yet, I would show the balance that I'm holding of that bond under bond construction funds. Okay. Pension and retirement funds are any money that you're holding for pension or retirement costs. So if you're like self-funding retirement benefits for your retired employees, and there's you have a reserve fund for that, that needs to be reported here. Part of your carried ending balance is pension and retirement fund costs. That should be reported here. Everything else, absolutely everything else, that money no matter what it's being held for, should go under all other funds. So if I am a small to medium-sized city and I didn't borrow money in the last year and I didn't do an advanced refunding in the last year of a debt outstanding, all of my money will show up under all other funds. Most of you will report all of your ending bank balance. And again, this is bank balance. So it's money in the bank on June 30 in all of my checking, savings, money market, investment, and CDs. All of that balance together, I'll put under all other funds if I'm a small or medium city. It's only if I'm a larger city or I had borrowed cash that I held at the end of the year should I put it in any of these other funds or any of these other categories. Excuse me. Okay. So that is going to confuse you when you get to it. Don't be afraid to ask me a question if you have it. But for the most part, if you don't know what to do with it, put it under all other funds. All right. Okay. Let's talk about the new city debt detail page. Oh, okay. Hang on. We got one question that came in. Petty cash considered a bank account. It is not considered a bank account, but it is considered balance. You should be reporting that as part of your beginning balance, and you should be reporting it as part of your ending balance. And then you can report it. You should report it as part of your bank balance on that. It's not part of a bank account, but you have to report it with part of your bank balance so that everything will tie together. So yes, do report that with part of your bank balance. That's a good question. Petty cash doesn't come up enough. Yeah. Petty cash is obviously cash that you're holding in office for things like taking payments and giving change and things like that. Okay. All right. The city debt detail page was added by House File 718 2 years ago when that passed. House File 718 said that starting with the December 1, 2025 AFR, we had to start collecting more granular data on the debt held by cities and counties. Okay. So now what we have to do is we have to account for your debts by individual debt issuance. Okay. So if you issued a debt, that debt has to have its own line on here, at least one line on here. So we'll talk about some instances where you may want to break it out later on as we go. But know that if I have 5 different debts that I am paying, I will need to have at least 5 lines of debts on the city debt detail page. This detail page is very similar, if you've done a budget already, to the long-term debt page of the budget. You're basically putting in similar information. This page is going to be a little more detailed and request more information, and some information that cities, even long-term city employees, have never reported is now required to be reported on this page. Okay, so you can see there's quite a few blanks that have to be filled. And we also give you we give you 6 sub pages. So the city debt detail will be the main tab at the top, but down below we have sub tabs for debt page 1, 2, 3, 4, 5, and 6. Each of them holds 20 lines of debts that you can enter. Most of you will not go past page 1, but some of the larger cities will go past 1 into 2, 3, 4 because they have that many debts, right? So let's take a look at what we need to enter on each of these pages. So the first thing we need to enter is a series name. The series name should be some combination of the year that the debt was issued, what source it's being repaid from, and what the project purpose of the debt was. So if I did a 2013 general obligation debt, which means it's a debt that I can repay with my debt service tax levy, then I would put in 2013 GO, and let's say it was for streets, then I would put in streets. That's my name. And I would leave that every single year until that debt is paid off. That's the same thing I would use on the budget, same thing I would use on here. Okay. So you don't have to make your debt series name too elaborate, but I would strongly suggest you use year, repayment source, and the project that was funded, the general project that was funded. Don't get too squirrely with the name because you don't have too many characters that you can use. You only have about 50 characters as your limit for debt series name. The type of debt is a dropdown. And so this dropdown will tell us which column of other P10 the ending balance belongs in. So the columns that you are allowed on the type of debt are general obligation, revenue, TIF revenue, and other. We added another type of debt for TIF agreements. Okay, we've never had you report TIF agreements on the other P10 debt matrix before, but because of the way the legislation was worded, it seems like they have to be reported here now. So we added a TIF agreements type for if you have a if you have any negotiated rebate or developer or economic development grant agreements that will be repaid by TIF dollars, those are ones where you put it, you just add them all together into one line. And I'll show you back here. So you can see the top line back here is just TIF rebates. The type of debt is TIF agreement. The date of issuance will be the end of the fiscal year that's being reported. The debt resolution number will be TIF rebate. And then you can just add it all together. How much was issued originally, how much is outstanding for principal, any interest outstanding, or any principal paid during the fiscal year, interest paid during the fiscal year. You put the purpose of the debt will be TIF revenue, and then TIF rebates will be the explanation of what was funded by it. We'll go over that little by little as we go through, but I want you to know that if you have TIF rebate agreements or negotiated TIF agreements that you would be reporting under GASB 77, those should all be added together onto one line and be treated as TIF rebates. Okay. Type of debt there would be TIF agreement. Otherwise, you do it by how can this debt be repaid? If I can repay this debt with general obligation, I mark it as general obligation. That means debt service levy, if I'm able to levy for repayment of the debt. If I can repay it only from water, sewer, gas, electric, some form of revenue, I mark it as revenue. If I can only repay it from TIF revenue and it is a structured multi-year debt, like a bond or a note or a loan, then I mark it as TIF revenue. If it's payable from TIF revenue, but it is a negotiated agreement that did not go through a bank or investment house, that is a TIF agreement. Okay. And then other is anything else, leases, any kind of weird rent to owns that you have, those would be other. But you should have very few others, if any. Most of the time, you will not have an other type of debt. It will either be general obligation, TIF revenue, or TIF agreement. Okay. Now, you will have a million questions on this debt detail page as you go. Don't worry, I understand. I'm already preparing myself for the onslaught this fall because we've never entered this information on the AFR before. So don't feel like you have to come up with all your questions right now. Just try to absorb this. Ask questions if you have them, but otherwise, there will be plenty of time to ask me questions later. Date of issuance and debt resolution work together. So when you have a debt issued by a city, you have to pass a resolution after a hearing to approve the debt, whether it's a bank loan with a local bank or you're selling a bond to a group of investors, same approval process. You have to have a hearing on the debt and then pass a resolution at least. It may also have to be voted on, but it at least has to have a debt resolution. So the date of issuance that we're looking for is what was the date when the debt resolution was passed, the original resolution that approved the debt in total. The debt resolution number is the number of that resolution that approved the debt originally. So here we're talking about the night that the debt was approved by the council. We want that date. We want that resolution number that approved the debt. That's what we're looking for. Okay. You already have to enter the debt resolution number on your long-term debt page of your budget. So you should be able to just scrape those from there and plug them into here. New thing that has never been entered on any kind of reporting before, other than audits, we also want you to put in your rate range for your interest rates on the debt. So we want you to put in over the life of the debt. So from year 1 to year 20 or year 10 or however long it goes for repayment, what was the lowest amount of interest rate that you had? And what is the highest amount of interest rate that I had? Typically, you're going to pay the least in year 1, the most in year 20 or year 10. Typically, but sometimes it will have a more of a bell curve shape and you'll pay the least in year 1 and the most in year 10 and then a low amount again in year 20. So you have to go through each of the years in your debt and just say, what was the lowest rate I was assessed? What was the highest rate? Put a hyphen in between them. So if, for instance, so we come back here, you can see on my 2014 Geo Street bond, I paid a low of 1.25% and a high of 5%. So I put in 1.25-5.00. That's how we want you to enter those for rate range. Simple as that. Okay. All right, I'm going to stop here for a second before we get into voted because that's quite a conversation and answer 2 questions that have popped in. So are those types of debt descriptions listed somewhere? Yes, it will be a drop down and you can also see them if we go back to the other P10 debt matrix. It's right here, the column header, general obligation, TIF revenue, other, and then we have a TIF agreement one that got added so that we can recognize TIF agreements. But they will be that the type of debt column is a drop down. So you'll have a drop down there and you just select from the list. You don't have to remember them and type them in. We give them to you and then you select from the list. Let's see, what if some TIF rebate agreements do not have a total amount, but a percent of what is collected for the fiscal year? So 99.9% of TIF rebate agreements, they will have an amount not to exceed for the life of the rebate agreement. So it'll say you will pay them 75% of the available increment up to an amount of no more than $5 million total. So our amount outstanding will be that $5 million minus what they've already been paid. Okay, so we take the not to exceed amount minus what's already been paid prior to the beginning of the fiscal year being reported. And that's the amount we want you to report for amount outstanding for the year. Okay, just like we do on the annual urban renewal report when you do that report. But that's a good question because, yeah, rebates are variable from year to year. That's why we have to use the not to exceed amount minus anything they've been paid previously. Okay. All right. The next column is voted, but basically what this means is methodology of issuance. How was this issued, this debt? Like I said, all debts have to be approved by a resolution after a hearing, but some debts have to go through the extra step of being voted on. So if you have, there's two types of debts that you can issue as a city. There's general corporate purpose debt, and there's essential corporate purpose debt. Essential corporate purpose debt are things that are more horizontal in nature: roads, utilities, a lot of urban renewal activities. Those are kinds of things. Equipping of public safety entities like police and fire. Those are all essential corporate purpose, meaning that they're considered sufficiently important to the running of a city that you do not have to have a vote of the citizens on it to issue the debt to do the project. The city council alone gets the power to approve those types of GO debts. Okay, general obligations. That's essential corporate purpose. That means the council approves it and it's not eligible for a vote unless it gets reverse referendum, meaning the citizens petition to have a vote on it. Then it gets voted on. But there's nothing in the law that says it has to be voted on outside of the reverse referendum. That's essential. General corporate purpose debt is debts for building buildings and building pools and buying certain types of equipment that is more horizontal or more vertical in nature. And those go to a vote of the citizens if they're above a certain threshold. So each city by population gets a threshold that they can take out general corporate purpose debt up to. And if they're going to issue a debt over that threshold, that has to be taken to a vote of the citizens before it may be issued. Okay. So we have to now track for each debt that you have issued as a city, how was it issued? What was the level that you had to go to issue that debt? So number one on there is voted. That means that before you could issue the debt, the general corporate purpose debt, it had to be voted on. Or it was an essential corporate purpose debt that got reverse referendumed and it had to be put to a vote. So if the vote had to happen, a vote of the citizens had to happen before the debt was issued, then it is voted that you would select. Okay. If it was not voted on because it was an essential corporate purpose, you would select no vote essential GO. Okay, meaning it was an essential corporate purpose project. It never went to a vote. No vote below threshold means it was a general corporate purpose that you issued for, but you were below that amount threshold that would require a vote, that threshold that triggers a vote. You were at or below that threshold. That changes yearly. And that yearly change is now posted on our website, dom.iowa.gov, under city resources. It'll be at the top as a notice. So be mindful every single year that changes. But here we're only talking about when it was issued. Did it have to go to a vote? No vote below threshold means it could have, but we issued a low enough amount that it did not have to go to a vote of the citizens. And then the last category is no vote because it wasn't a GO debt. So general obligation debt, again, is debt that gets approved to be, you can use your debt service levy to repay it. So meaning you can issue property tax to repay it. The other type of debt is revenue debt or non-GO debt, which is you use a revenue of a system or some other non-property tax source like road use tax or local option sales tax to repay the debt. So if you have a debt that's marked as a general obligation, you'll either mark it as voted, non-voted essential GO, no vote below threshold, one of those three. If you have a non-general obligation debt, so it's a water revenue debt, or sewer revenue debt, or road use tax revenue debt, those would be no vote non-GO because they were never allowed to be taxed for in the first place by law. Okay, so you'll have to select one of these 4 categories based on how the debt was originally approved. Now, for those of you who are new clerks coming into an office where a debt has existed for 15 years prior to you being there, you're going to have to go back to the original resolution for the debt and see how it was issued. Thankfully, a lot of times in the resolution or in the debt title itself, it will often say whether it was general corporate purpose or essential corporate purpose. So if it says general obligation, essential corporate purpose, you already know I'm using no vote, essential GO, unless it got a reverse referendum. And that's when you have to go back to the resolution to double check. Okay, because there is a chance it could have got reverse referendum. It doesn't happen often, but it does happen. If it says general corporate purpose, then you know you have to check to see if it was voted on or not. Okay, if it says revenue debt, then you know it's no vote non-GO. And you can just select that. Okay, pretty straightforward, but it's going to require some research on your part. Like I said, especially if you're new to the city and you have some outstanding debts that were issued before you got there, you may have some research ahead of you. You should have a copy of the resolution on file because, like I said, every single debt has to be issued by a resolution. So you can go there first, look locally to see what you have. If not, a lot of times when you issue debt, probably 90% of the time when you issue debt, a bond attorney was involved. There's only 2 large bond attorney firms in Iowa that do 95% of the work in the state, Dorsey and Whitney, Allers and Cooney. One of them may still have a copy. So you would go to the firm that helped you with that debt issuance, and you could ask them to see if they have a copy of the resolution. Your county auditor, if it's a general obligation debt, your county auditor should also have a copy of that resolution on file because under 76.2 of the Iowa Code, when a new general obligation debt is issued by a city, they also have to then file a resolution with the county auditor. So make sure that you are getting those filed, but that's another place where you could look for those if you can't find them locally. Okay. Amount of issue column is where we want you to put in the original amount borrowed. So how much, when this was a brand new debt, regardless of how much we owe still, how much was originally borrowed? It's also called the par amount. It could be called the amount of issue. Could be called the original principal amount. There's a lot of different ways to word this, but it's the amount that was originally borrowed. Principal outstanding as of the beginning of the fiscal year. So July 1, in this case, July 1, 2024, you'd enter how much principal is left to be repaid before you made payments last year. Okay, so how much was left to be repaid as of July 1 of the year being reported? Just principal, not interest. Then there's 2 columns, one for fiscal year principal paid and one for fiscal year interest paid. So what we want to know there is how much did you actually cut a check for this debt in terms of principal paid and interest paid? Okay, separate those 2 out. Don't just give us one total. For your TIF agreements line, you're going to show just principal because most of those do not. Rebate agreements, negotiated contracts that are repaid by TIF, those generally don't charge interest. Okay, you do not need to enter internal loans anywhere on here. So if it's money you owe yourself, that doesn't get put on here. Okay, only money owed to outside sources. Again, for rebate agreements and TIF agreements that you're all aggregating onto one line, for the amount of issue, you put in the amount of not to exceeds, the original amount of not to exceeds in their agreement added together. For principal outstanding, you take that added together amount of not to exceed and subtract off anything that was paid prior to July 1 of the year being reported. That's your amount outstanding, your principal outstanding for the fiscal year. And then for fiscal year principal, you just enter the amount that was paid during the fiscal year on those agreements. Okay. That may sound like gobbledygook now. As you get going, it might make more sense. Again, ask questions of me as you have them when we're in the outside world. Oh, what do we do what do we do with LMI amounts? LMI stands for low and moderate income. There are requirements under certain TIF projects that you have LMI collected as well. That we are not going to count in this instance as a debt because that's money you owe yourself. So treat it like an internal loan and don't report it here. That's what we'll do with LMI. Great question. Would we put the service fees paid in the principal field? No. If you have, so debt repayment, in some instances, will have what's called a servicing fee or a bond paying agent fee. A good example is SRF program. If you have an SRF revenue loan, you have a principal payment, an interest payment, and then what they call a servicing fee. That servicing fee you can leave out of this. Don't report it anywhere on this debt matrix because we don't want to, that we only care about principal and interest. We don't care about the servicing fee for this particular reporting. So just leave it out altogether. Good question again. Okay, tied to other debts gets confusing. This legislation required that we show any debts that were issued for the same purpose as a different debt. So let's say we had a giant project. We did a giant water project where we were replacing all of the water mains in our city, right? And we issued our debts staggered just to control the amount of money outstanding at any one time. So in 2018, I issued part of it. In 2020, I issued part of it. And in 2022, I issued part of it just to maintain our debt balance and what we could repay. All of them are doing the same thing. They're replacing the water mains throughout the city. It's one big project. So I would have to use the drop down under tied to other debt. There's a drop down that will come down and it will fill in with all of the lines of this page. As you add lines, it'll add new lines. So let's say, going back to our big screenshot here. So we've got a 2018 water SRF, a 2020 water SRF. So let's say these two debts were for the same project, water main replacement. Okay. I would show that line 3, the 2018 water SRF, is tied to line 4, which is the 2020 water SRF. And I would show that line 4, the 2020 water SRF, is tied to line 3. And I would show those two as tied together. Okay. They both went to the same specific purpose. So I show them as tied together in terms of purpose. All right. That's what tied to other debt means. And again, that is a drop down. If you have, so that works nicely if there's just two debt issuances that are tied together because you show one tied to the other tied back to that one. If you have more than two, you have to show this, your first one's tied to your second one, your second one's tied to your third one, your third one's tied to your first one. You just have to kind of show that they're all tied together, otherwise it gets out of control. If you have questions about how the debts are tied together, let me know. But basically what the legislation wants to know is, was more than one debt issued for the same project? That's what they're looking for. And we give you that drop-down menu to show that. Okay. Purpose of debt column is a drop-down to tell us what was the overall purpose of this debt. And that ties back again to the debt matrix on other P10, which it's basically just a statement of those lines on other P10. So our purposes are pretty generic: water revenue, sewer revenue, electric revenue, gas revenue, or utility. And then it's things like transit utility, is general obligation. There's a list of them on the other P10 debt matrix, but you just have to select the one that most closely aligns with the debt that you issued. Now, where it becomes problematic is if I have a geo debt that I issued for multiple purposes. Some of it was water utility, some of it was sewer utility, some of it was streets, some of it was for TIF revenue or TIF project purposes. I have 4 different purposes. What do I do? One of two things. Number one, you could put it in as one entry, one line, and mark it as general obligation as the purpose of the debt. General obligation. The other thing you could do is you could put in 4 separate instances broken apart by the part that went to water, and the part that went to sewer, the part that went to TIF, and the part that went to streets, and show them each with their own. They'll all have the same date of issuance, the same resolution number, but they'd have separate amounts of issue, they'd have separate amounts outstanding, they'd have separate amount of payment, and then you would show it as to each purpose. You could do it either way. I'm happy either way. If you want to lump it all onto one line, we can lump it all onto one line. That's fine. Okay. That's probably going to be the easiest way, the path of least resistance, because then you can then parse it in the next category. Because remember, that's a drop down and it'll give you a set number of, or a set list of types of projects. You just pick the one that most closely resembles what the debt was issued for. The next is an open field where you can type in what projects were funded by this debt. Okay, so this debt paid for some projects, and in the case of general obligation debts, it may be multiple projects. Put in a broad general statement about what did this fund, but it needs to be something people can understand. So no project numbers. If you have internal project numbers that you assign, don't do those. Don't do your do something that any citizen could understand. So if you replaced like asphalt on streets, just put resurfacing of streets, blah 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 blah, right? Whatever streets they are. Now here's where it gets tricky. Each of these cells has a 150 character limit. A letter is a character, a space is a character, a punctuation mark is a character. So you've got 150 of them, so you have to be concise. Okay, so make sure that you are putting in broad enough statements that it is under the 150 character limit, but they've got to be specific enough that people understand what you're talking about. Okay, so if you do street resurfacing and you can't fit in the streets that were resurfaced, that's fine. Street resurfacing works. But if you put in street resurfacing and it was only 2 streets that were resurfaced, you can put in the name of the 2 streets. Simple as that. Be as detailed as you can in the amount of characters given. All right. That we have problems with, getting it all on the page when it gets printed. So that limits us to the number of characters. If we go to like 300, we can only get 10 on a page, and that becomes cumbersome to have to flip page to page to page. So we're going with 150. We'll see how it works. We might make changes for next year. But there you're putting in what was the money originally spent on, what project. Okay. There's just a list of reminders. This is all stuff that I've already told you, but it's just a good reminder to have. Okay, let's talk about all funds P1. So that will get you to the end of your entries, right? That information that we put in on the city debt details flows into other P10, which flows into all funds P1. All funds P1 is just a summary of all of the data that you've entered on all of the other pages. Okay, so it should come up and it'll be a summary of everything that you've entered on the other AFR pages. The other thing that comes into it, the other thing that you might have to enter on here is at the bottom of or towards the bottom of the page, there's a section for non-budgeted balances that you're carrying, right? So if you carry money for some other organization that you're fiscal agent for, so like a charity or something that the city acts as fiscal agent for, but it's not city money, don't report that as part of the city balance on other P10 or on revenues page 5 or expenditures page 9. You would include it as part of your bank balance on other P10. But you would show it here, since you don't budget it, you would show the amount that you're carrying for non-budgeted internal service funds, which is cost sharing between departments, pension trust funds. So if you have a dollar set aside to fund an employee pension fund, but you don't budget it yearly, private purpose trust fund. So if you're acting as a fiscal agent, this is the most common one. So if you're acting as a fiscal agent for someone who's not the city, you're just writing checks for them because it's easy for you to do, and then that way they don't have to do it. That would be considered a private purpose trust fund. And then agency funds. So if you are acting as the fiscal agent for an agency, like a housing agency or an economic development agency that's not part of the city, but you're acting as fiscal agent, that money would go here that you're holding for. Okay, that gets entered into one of those 4 slots and then gets added on to the balances that you've reported on other pages. Okay, most of you will not have to deal with that at all, right? The other thing that comes in from other P10 is your indebtedness. So this will flow through directly from other P10, which flows through directly from the city debt detail page. Okay, all of this populates automatically. The one thing I will point out here is on the left-hand side, or the right-hand side, excuse me. I don't know my right from my left, never have. The right-hand side, there's a budget column that will auto-populate. It is still blue cells, but that will auto-populate. You should never have to touch that number because it will come from your most recent amendment to the budget during the fiscal year or your original budget if you did no amendments. Okay, so don't touch that column even though they're blue. Leave them as they are because they came from another source. If you have questions about it, contact me and we'll figure it out together. But those come directly from our budget side of the system. So you shouldn't have to do anything with those. Right? Okay. Let's talk about completing and submitting the AFR. Home stretch here. So before you submit your AFR, make sure you're double checking a few key points. Again, I've said it a million times, I'm going to say it again, that you've entered a beginning balance by fund on line 134 of revenues, page 5. Okay. Don't put it all under general, split it out into the funds which earned it and where it's held. Make sure that you tied out all of your revenues, expenditures, and balances to your accounting software or general ledger. Okay. Review the AFR with your mayor and your council. Again, it is not legally required that you present it to them in meeting, but it is a very good idea so that they understand where the city's fiscal position was actually, what it actually was at the beginning of the fiscal year. So it's a very good idea, not legally required. You can submit your AFR before you take it through your council and mayor, but please take it through your council and mayor at some point. Okay. You have to clear all of the errors before you're allowed to do the publish posting button. The most common errors that you will find is missing allocation of funds, lines 140 through 144. Basically means that you did not, your line 145 balance does not match your line 147 balance by fund. So you have to make sure that in each fund, your lines 140 through 144, which totals onto line 145, matches line 147 by fund, not just by total. Okay. It will give you a generic error message. It won't tell you which one is off necessarily, but it will tell you that it is off. Okay. A lot of times the error message that comes up, we try to guide you as much as we can to where to look. So this will tell you, look at your lines 140 through 144 in expenditures, page 9. The other one that we get most often is your TIF balances, or your transfer balances, excuse me, are unbalanced between regular and TIF transfers. You may be balancing in total, but the amount you have on each line, regular and TIF, does not match. Okay, so if I have a TIF transfer out, I have to have a TIF transfer in. If I have a regular transfer out, I have to have a matching regular transfer in. I can't flip-flop them between the lines. Okay, so make sure you're checking those. Once you clear those errors, you're allowed to you're allowed to enter the name of the person who prepared it on the bottom of all funds P1, the phone number of the city, and the date that this is signed, because this has to be signed by the preparer and the mayor. Okay, so the top kind of grayish blank here, gray, brown, tan, I guess, that would be where the preparer signs it. So whether that's the city clerk preparing it, the finance officer, the city manager, or an outside accounting firm, the preparer would sign it. And then on the bottom, the mayor signs it saying, yep, I have reviewed it and it is accurate. Okay, so the mayor signs the all fund P1 page, and make sure you type in the printed name of the preparer, the phone number, and the date before you do publishing posting. Okay, before you click that button. You can then click on publication posting button to create a notice that can be published or posted. You can either email, it'll create a PDF just like the budget, where you can email it directly to your publication entity. You can also, you can post that notice that generates per PDF at your 3 locations. So if you're 200 and below in population, you just have to post at 3 locations within the city, and those 3 locations are the places you post every notice, and they should be defined by ordinance. If you're over 200 in population, you have to publish this in a newspaper of general circulation inside the city, just like you do any other ordinance notice or public hearing notice. Okay, so it doesn't have to be in any 4 and 20 range. You just have to do it before December 1st so that you can submit it on time. Right? Okay. So if you're a city under 200 in population, you get an extra page in your AFR that you have to complete. It's called a posting affidavit page. And it's just you stating what are the 3 locations you posted it and what date did you post it. That's it. Okay, so you put in your 3 locations where you posted it, print your name, put in the date, and then you'll print and sign it along with your All Funds P1 page to be submitted to the auditor of state. Actually gets these reports. I just do the front end work for them because we have the resources to do that. So eventually you will submit a signed copy of the All Funds P1 page. And if you're a posting city, the posting affidavit page. If you're a publication city, you will submit your proof of publication to the auditor of state's office. Okay. So make sure that you're getting those items together. We have a methodology for you to submit it through our system, and I'll show you that in a second. Okay. There's the publish posting button. And again, you have to have all your errors cleared. You click the publish posting button, pop-up comes up, you enter the date that it's going to be published or posted. Once you do that, it'll allow you to create a PDF or print a copy of the notice page. So make sure you do that. I would save it as a PDF because then you can save it to your system and email it off to your publisher, or print it for your print your 3 for your postings. Okay, once you're done with that, you can either electronically submit a copy of the signed documents, the All Funds P1 page and your proof of publication or affidavit of posting. You can either scan and submit it through our document upload button, which we'll talk about in a minute, or you can still mail them if you want to. Here's the mailing address for the auditor of state's office. Like I said, they get these documents. They don't come to me. But if you have any questions about submission or about the entire AFR process, I'm your guy. It's a little confusing. We're trying to help each other out with what we do best. So I'm doing all the front end work for the auditor of state, but they're the ultimate ones who retain the data. Okay. Important thing to remember, all funds P1 has to be signed by the mayor and the preparer. You have to submit a proof of publication from your newspaper of record or the affidavit of posting if you're a posting city. They can be uploaded or they can be mailed. So if you want to upload them, there's a document upload button in the top left of the system. The document upload button will allow you to upload two separate documents, one for your all funds P1 page and one for your your proof of publication or posting. Okay, so that is now you go through a system, a process in our system. This one I got to change it. I noticed I still have the Google web page in here, but it's no longer a Google web page. It is in our system. It'll bring up a pop-up screen where you're able to select your file, your saved scanned file of your signed all funds P1 and your saved file of your your proof of publication from your publisher or your signed affidavit page. We need those two documents before this is considered complete and submitted. So we need those as well by December 1st. So make sure you are planning in your timeline to give yourself enough time to complete those documents, their signatures, and the submission of them, whether you're going to mail them or upload them. Okay, if you have trouble with the upload, talk to me. I can help you out. Once you get to there, you have submitted and you are good to go for another year. Any last questions we have? Otherwise, that is everything I've got. Not seeing any questions, Mickey. So everyone's probably nicely asleep right before lunch. Either that or has left and gone and got lunch.
Yeah, exactly. I was gonna say it's lunch, the lunch hour has hit, so perhaps that's the case. But again, if you have any questions, as we said before, Ted is available, always kind and responsive. Same with Teresa and the League of Cities in total. We're always here to help you all. I want to thank Ted once again for giving his time and wisdom for this important topic. We did record it, and I will try to turn that around here in the office yet today, if possible, and get that follow-up email out to you all. And so be looking for that. And again, thank you all. We appreciate it.
And again, just a quick reminder, if you're waiting and you want to see the recording, there is still a recording. Granted, it will not have the city debt detail page yet. I haven't added it yet, but always on the DOM website, dom.iowa.gov. Under local government, go to city resources. And on there, there's an option for training videos. And one of those training videos is on the AFR. So that is out there. It's not as up to date as this one obviously will be, but it's still there.
Yep. And we did get one quick question here. We are a city of 600, but no local paper. Do we just post?
No, you have a paper that has subscribers in your city. That's the paper you would use. So the one of general circulation doesn't mean it has to be published there. It just has to be general circulation. So you would still you have a newspaper near you that circulates inside your city. That's the one you would use.
That's correct. Good question. All right. Well, we thank you again, Ted. And thanks to all the attendees. We appreciate it. And I'm sure we'll talk to you all soon. Take care.